Question 1. Ms. Peterson is a resident of North Dakota and is considering purchasing a long-term care insurance policy. According to North Dakota regulations, which of the following statements is most accurate regarding shoppers' rights for long-term care insurance policies? A. Ms. Peterson has the right to cancel the policy within 30 days of purchase for any reason, with a full refund of premiums. B. Ms. Peterson cannot make any changes to the policy after it is issued. C. Ms. Peterson has the right to request a guaranteed renewal provision in the policy. D. Ms. Peterson is required to complete a medical exam before the policy can be issued. The correct answer is A. Ms. Peterson has the right to cancel the policy within 30 days of purchase for any reason, with a full refund of premiums. North Dakota adopted the Shopper's Guide to Long-Term Care Insurance Model Act. This act guarantees a free look period of 30 days after the policy is delivered, allowing Ms. Peterson to review the policy and cancel it for a full refund if she is not satisfied. While some insurers may require a medical exam, it is not mandatory under North Dakota law. Option B is incorrect, as most policies allow for changes upon approval. Option C is not always guaranteed, but the option to request it exists. Question 2. Mr. Garcia is a life insurance agent licensed in North Dakota. He is contacted by a potential client who resides in South Dakota. Can Mr. Garcia solicit and sell life insurance to this client? A. Yes, as long as Mr. Garcia discloses that he is not licensed in South Dakota. B. Yes, but only if the life insurance policy is issued by a company licensed in both North Dakota and South Dakota. C. No, Mr. Garcia cannot solicit or sell life insurance to someone residing in a state where he is not licensed. D. No, but Mr. Garcia can refer the client to a life insurance agent licensed in South Dakota. The correct answer is C. No, Mr. Garcia cannot solicit or sell life insurance to someone residing in a state where he is not licensed. Life insurance agents are required to be licensed in the state where the insured resides. Soliciting or selling insurance across state lines without a proper license is a violation of insurance regulations. While option D might be a helpful solution, Mr. Garcia cannot participate in the sales process himself. Question 3. North Dakota requires continuing education for life and health insurance agents. According to North Dakota Insurance Department regulations, which of the following statements is true regarding continuing education, CE, requirements? A. All CE credits must be completed in person. B. There is no minimum number of CE credits required to renew a life and health insurance license in North Dakota. C. CE courses must be approved by the North Dakota Insurance Department. D. Life and health insurance agents are exempt from CE requirements if they hold a specific professional designation. The correct answer is C. CE courses must be approved by the North Dakota Insurance Department. North Dakota mandates continuing education for life and health insurance agents to ensure they stay updated on industry knowledge and regulations. The North Dakota Insurance Department approves CE courses that meet specific criteria to ensure their effectiveness. While online courses might be available, option A is not always the requirement. Option B is incorrect, as there is a minimum CE requirement. While professional designations might offer some CE credits, option D does not exempt agents from fulfilling the state's CE requirements. Question 4. Ms. Johnson is a resident of North Dakota and is considering a Medicare supplement policy. North Dakota mandates specific benefits to be included in all standardized Medicare supplement plans. What is the correct description of these mandated benefits? A. These benefits are identical across all Medicare supplement plans, A, B, C, D, etc. B. These benefits are a combination of federal and state-mandated coverages. C. The specific benefits vary depending on the chosen Medicare supplement plan, e.g., Plan F, Plan G. D. Ms. Johnson can choose to opt out of some of the mandated benefits to reduce her premium costs. The correct answer is C. The specific benefits vary depending on the chosen Medicare supplement plan, e.g., Plan F, Plan G. The National Association of Insurance Commissioners, NAIC, developed standardized Medicare supplement plans, Plans A, B, C, D, etc., with a defined set of benefits. However, North Dakota can mandate additional benefits to be included in these plans within the state. So, while there is some standardization, Ms. Johnson should carefully compare the specific benefits offered under each plan, F, G, etc., before choosing. Question 5. Mr. Davies is a North Dakota resident considering a health insurance policy. He has a pre-existing medical condition. North Dakota has specific regulations regarding health insurers' ability to deny coverage or impose rating restrictions based on pre-existing conditions. According to North Dakota law, which of the following statements is most accurate? A. Mr. Davies' health insurance application can be denied due to his pre-existing condition. B. Mr. Davies can be charged a higher premium based solely on his pre-existing condition. C. Mr. Davies is guaranteed coverage under an individual health insurance plan, regardless of his pre-existing condition. D. Mr. Davies may be subject to a waiting period before coverage for his pre-existing condition takes effect. The correct answer is D. Mr. Davies may be subject to a waiting period before coverage for his pre-existing condition takes effect. The Affordable Care Act, ACA, prohibits health insurers from denying coverage or charging higher premiums solely based on pre-existing conditions. However, North Dakota might allow insurers to impose a waiting period before coverage for pre-existing conditions begins. Question 6. An agent is marketing accident and health insurance policies in North Dakota. North Dakota requires specific disclosures to be provided to applicants for accident and health insurance. Which of the following disclosures is most likely required by North Dakota regulations? A. A disclosure explaining the agent's commission earned from selling the policy. B. A disclosure outlining the policy's grace period for premium payments. C. A disclosure detailing the benefits and exclusions of the policy. D. A disclosure highlighting any potential tax advantages of the policy. The correct answer is C. A disclosure detailing the benefits and exclusions of the policy. North Dakota mandates agents to provide applicants with clear and concise information about the accident and health insurance policy they are considering. This includes a detailed explanation of the benefits the policy covers and the exclusions that might limit coverage. Question 7. Ms. Lee is a resident of North Dakota and is diagnosed with a critical illness. Her health insurance policy includes a critical illness rider. According to North Dakota insurance regulations, what is typically not covered under a critical illness rider? A. Waiver of premium payments upon diagnosis. B. Lump sum cash benefit upon diagnosis. C. Reimbursement for covered medical expenses related to the illness. D. Long-term care services required due to the illness. The correct answer is C. Reimbursement for covered medical expenses related to the illness. Critical illness riders are designed to provide financial protection in the event of a severe illness. While the specific benefits may vary by policy, North Dakota mandates that critical illness riders typically cover lump sum cash benefit. This is a one-time payment upon diagnosis of a covered critical illness. Waiver of premium payments. The insurance company waives the policyholder's premium payments upon diagnosis, ensuring continued coverage without financial burden. Critical illness riders typically do not cover ongoing medical expenses related to the illness. These expenses are usually covered by the health insurance policy itself, separate from the critical illness rider. Question 8. An insurance agent in North Dakota is explaining Medicare supplement policies to Mr. Rodriguez. According to North Dakota regulations, which of the following statements is most likely not accurate regarding Medicare supplement policies? A. Medicare supplement policies help pay for some of the out-of-pocket costs associated with original Medicare, Parts A and B. B. Standardization rules in North Dakota dictate specific benefit plans for Medicare supplement policies, identified by letters A, B, C, etc. C. Mr. Rodriguez can purchase any Medicare supplement policy offered by an insurance company licensed in North Dakota. D. North Dakota mandates a guaranteed issue right for Medicare supplement policies during a specific enrollment window. The correct answer is C. Mr. Rodriguez can purchase any Medicare supplement policy offered by an insurance company licensed in North Dakota. Medicare supplement policies are standardized in North Dakota. This means that policies with the same letter designation, e.g., Plan A, Plan F, offer identical benefits regardless of the insurance company selling the policy. This allows for easier comparison between plans. North Dakota also adheres to Medicare supplement guaranteed issue rights. During specific enrollment windows, such as the Medigap open enrollment period, insurance companies cannot deny or condition coverage based on Mr. Rodriguez's health status. However, North Dakota does not require insurance companies to offer all standardized Medicare supplement plans. An insurance company may choose to only offer certain plans, e.g., Plans A, B, and F, within the standardized options. Question 9. An insurance agent is working with a client, Ms. Diaz, who is considering long-term care insurance. Ms. Diaz is concerned about the potential for premium increases. According to North Dakota regulations, what consumer protection applies to long-term care insurance policies in the state? A. North Dakota requires guaranteed renewability for long-term care insurance policies. B. North Dakota mandates that long-term care insurance premiums cannot increase after a certain age. C. North Dakota mandates guaranteed insurability for long-term care insurance policies, allowing Ms. Diaz to purchase coverage regardless of her health. D. North Dakota requires long-term care insurance policies to offer inflation protection riders. The correct answer is A. North Dakota requires guaranteed renewability for long-term care insurance policies. Guaranteed renewability is a consumer protection that ensures Ms. Diaz's long-term care insurance policy cannot be canceled by the insurance company, except for non-payment of premiums. This protection provides peace of mind knowing her coverage will remain in place as long as premiums are paid. North Dakota does not mandate guaranteed insurability for long-term care insurance, meaning Ms. Diaz's health status could affect her ability to purchase coverage in the future. Additionally, North Dakota does not require premium stability or inflation protection riders for long-term care insurance. It's important for Ms. Diaz to carefully review the specific terms of any long-term care insurance policy before enrolling. Question 10. Ms. Lee wants to replace her current whole life policy with a new universal life policy. According to North Dakota insurance regulations, which of the following statements is most accurate regarding replacement policies? A. Ms. Lee cannot replace her policy unless the new policy offers a lower premium. B. Ms. Lee's agent is required to provide a written disclosure comparing the old and new policies. C. Ms. Lee must surrender the original policy to the new insurance company within 30 days. D. There are no specific North Dakota regulations regarding replacement of life insurance policies. The correct answer is B. Ms. Lee's agent is required to provide a written disclosure comparing the old and new policies. North Dakota Administrative Code 1020-29.1-02 requires insurers to provide a written disclosure form, notice regarding replacement of life insurance, at least 20 and no more than 30 days before replacing an existing life insurance policy. This disclosure compares the benefits, premiums, and cash values of both policies. Question 11. Mr. Hernandez is applying for an individual health insurance policy in North Dakota. He has a pre-existing condition for high blood pressure. North Dakota follows guaranteed issue for individual health insurance. What does this mean for Mr. Hernandez? A. He cannot be denied coverage based on his pre-existing condition. B. He will be charged a higher premium due to his pre-existing condition. C. The insurance company can deny coverage but must offer a guaranteed replacement plan. D. Mr. Hernandez will need to complete a medical questionnaire to qualify for coverage. The correct answer is A. He cannot be denied coverage based on his pre-existing condition. North Dakota adopted guaranteed issue for individual health insurance policies. This means insurance companies cannot deny coverage or charge a higher premium based on pre-existing conditions. North Dakota Century Code Chapter 26.1 to 12.1. However, they can still require applicants to complete a health questionnaire for underwriting purposes. Question 12. Ms. Davis is approaching 65 and is on Medicare. She is considering a Medicare supplement policy, Medigap, in North Dakota. North Dakota mandates specific standardized Medigap plans. What is the primary benefit of standardized plans? A. Standardized plans offer a wider variety of coverage options for Ms. Davis. B. Standardized plans guarantee acceptance regardless of Ms. Davis's health status. C. Standardized plans across different insurance companies offer the same benefits for a given plan type. D. Standardized plans are the only type of Medigap policy available in North Dakota. The correct answer is C. Standardized plans across different insurance companies offer the same benefits for a given plan type. North Dakota follows the National Association of Insurance Commissioners, NAIC, standardized Medigap plans, A, B, C, D, F, G, I, J, K, L, M, N. These plans offer a set level of benefits, making it easier for Ms. Davis to compare coverage across different insurance companies. This standardization does not affect acceptance or health status requirements. Question 13. John just obtained his life and health insurance agent license in North Dakota. He must comply with specific continuing education, CE, requirements to maintain his license. According to North Dakota regulations, what is the minimum number of CE credit hours John needs to complete every 2 years? A. 4 hours. B. 8 hours. C. 12 hours. D. 16 hours. The correct answer is C. 12 hours. North Dakota Administrative Code 1020-22.1-03 outlines CE requirements for resident agents. Life and health insurance agents must complete at least 12 hours of CE credit hours every 2 years to maintain their license. Question 14. Ms. Chen is interested in purchasing long-term care insurance in North Dakota. She is concerned about potential inflation eroding the benefits over time. North Dakota mandates specific consumer protection features in long-term care insurance policies. Which of the following features is most beneficial for Ms. Chen in this scenario? A. Guaranteed renewability. This ensures the insurance company cannot cancel her policy. B. Waiver of premium rider. This allows Ms. Chen to stop paying premiums if she needs benefits. C. Inflation protection benefit. This increases Ms. Chen's benefit amount over time to keep pace with inflation. D. Prior hospitalization requirement. This specifies a minimum hospital stay before benefits are paid. The correct answer is C. Inflation protection benefit. This increases Ms. Chen's benefit amount over time to keep pace with inflation. North Dakota Century Code Chapter 26.1 to 12.2 mandates specific consumer protections in long-term care insurance policies. Inflation protection is a valuable feature that automatically increases Ms. Chen's benefit amount over time to help offset inflation's impact on long-term care costs. Question 15. A health insurance producer, agent, can sell accident and health insurance policies in North Dakota. When can a producer accept a premium payment from a client? A. Only after the policy is issued and delivered to the client. B. Upon receiving a signed application from the client. C. After verbally explaining the policy details to the client. D. At any time during the sales process. The correct answer is C. After verbally explaining the policy details to the client. North Dakota Administrative Code 1020-23.1-02 prohibits producers from accepting premium payments until a written application is submitted and a binder or evidence of temporary coverage is issued. This protects consumers by ensuring coverage is in place before any payment is exchanged. Question 16. Mr. Garcia wants to replace his existing individual health insurance policy with a new plan. North Dakota follows specific regulations regarding replacement in accident and health insurance. According to North Dakota insurance regulations, which of the following statements is least likely accurate regarding replacement policies? A. Mr. Garcia's agent must provide a written notice outlining the key differences between the old and new plans. B. The new insurance company may request medical records from Mr. Garcia's previous insurer. C. Mr. Garcia can cancel the new policy within a specific timeframe without penalty, free look period. D. Mr. Garcia can be denied coverage under the new plan based on his health status. The correct answer is D. Mr. Garcia can be denied coverage under the new plan based on his health status. North Dakota adopted guaranteed issue for individual health insurance policies, NDCC Chapter 26.1 to 12.1. This means Mr. Garcia cannot be denied coverage based on pre-existing conditions when replacing an individual health plan. However, other requirements like providing written notice and free look periods might still apply. Question 17. Ms. Johnson is considering replacing her current Medicare supplement policy, Medigap, with a new plan. North Dakota mandates a specific disclosure for replacement in Medigap policies. What is the primary purpose of this disclosure? Notice regarding replacement of Medicare supplement coverage. A. To document Ms. Johnson's reason for wanting to replace the existing plan. B. To highlight the potential financial implications of replacing the Medigap plan. C. To confirm Ms. Johnson understands the benefits of both Medigap plans. D. To obtain Ms. Johnson's written consent for replacing the current plan. The correct answer is B. To highlight the potential financial implications of replacing the Medigap plan. North Dakota Administrative Code 1020-29.1-03 requires insurers to provide a notice regarding replacement of Medicare supplement coverage when replacing a Medigap plan. This disclosure highlights the potential financial implications of the replacement, including potential premium increases or loss of benefits, allowing Ms. Johnson to make an informed decision. Question 18. Before applying for a life and health insurance agent license in North Dakota, individuals must meet specific pre-licensing requirements. Which of the following is not a pre-licensing requirement for life and health insurance agents in North Dakota? A. Passing a resident or non-resident qualifying exam. B. Completing a pre-licensing education course approved by North Dakota. C. Submitting fingerprints for a background check. D. Providing proof of professional liability, errors and omissions, insurance. The correct answer is C. Submitting fingerprints for a background check. North Dakota Administrative Code 1020-22.1-01 outlines pre-licensing requirements for life and health insurance agents. While fingerprints and E&O insurance are not mandatory pre-licensing requirements, passing the qualifying exam and completing a pre-licensing course are essential steps before applying for a license. Question 19. Ms. Lopez is terminally ill and considering a viatical settlement on her life insurance policy in North Dakota. North Dakota has specific regulations regarding viatical settlements. Which of the following statements is most accurate concerning viatical settlements in North Dakota? A. Viatical settlements are prohibited in North Dakota. B. Ms. Lopez can sell her policy directly to a viatical settlement company without involving her current insurer. C. North Dakota mandates a specific waiting period before Ms. Lopez can enter into a viatical settlement agreement. D. The viatical settlement company needs Ms. Lopez's current insurer's approval before proceeding. The correct answer is B. Ms. Lopez can sell her policy directly to a viatical settlement company without involving her current insurer. North Dakota adopted the Uniform Viatical Settlements Act, allowing terminally ill individuals like Ms. Lopez to sell their life insurance policies to viatical settlement companies. These companies pay a discounted lump sum based on Ms. Lopez's life expectancy. There's no mandatory waiting period, and she can negotiate directly with the viatical settlement company without needing her insurer's approval. Question 20. Mr. Brown is financing a new car and is offered credit life and disability insurance in North Dakota. North Dakota insurance regulations mandate specific disclosures for credit insurance. What does this disclosure requirement aim to achieve? A. To explain the tax implications of purchasing credit life and disability insurance. B. To highlight the benefits and limitations of credit life and disability insurance compared to other options. C. To document Mr. Brown's understanding of the credit insurance policy terms. D. To obtain Mr. Brown's written consent for purchasing credit life and disability insurance. The correct answer is B. To highlight the benefits and limitations of credit life and disability insurance compared to other options. North Dakota Administrative Code 1020-34.1-01 requires insurers to provide a clear and concise disclosure outlining the benefits and limitations of credit life and disability insurance. This empowers Mr. Brown to compare this coverage with other options, existing life, disability insurance, and make an informed decision about purchasing credit insurance. Question 21. North Dakota mandates specific disclosures to be included in life insurance contracts. Which of the following is least likely required for inclusion in a life insurance contract delivered in North Dakota? A. Grace period for premium payment. B. Policyholder rights to contest the misstatement of age. C. Exclusions and limitations on benefits. D. Procedures for filing a claim. The correct answer is C. Exclusions and limitations on benefits. North Dakota Administrative Code 1020-27.1-02 outlines required contract disclosures in life insurance policies. These include grace periods, rights to contest misstatements, claim filing procedures, and exclusions, limitations on benefits. Exclusions typically appear in separate documents and might not be directly included in the contract itself. Question 22. Ms. Peterson is a resident of North Dakota and is considering purchasing a long-term care insurance policy. According to North Dakota regulations, which of the following statements is most accurate regarding mandated benefits in long-term care insurance policies? A. Carriers must offer coverage for home health care only. B. Carriers must provide coverage for both nursing home care and home health care. C. Carriers are not required to offer any specific benefits in long-term care insurance. D. Carriers must cover assisted living facilities but not nursing home care. The correct answer is B. Carriers must provide coverage for both nursing home care and home health care. North Dakota mandates that long-term care insurance policies offered in the state must provide coverage for both nursing home care and home health care. This ensures a wider range of care options for policyholders. Question 23. Mr. Garcia is a life insurance agent licensed in North Dakota. He is contacted by a potential client who resides in South Dakota. Can Mr. Garcia solicit life insurance business from this client? A. Yes, as long as Mr. Garcia discloses his North Dakota licensure. B. No. Mr. Garcia cannot solicit business outside of North Dakota without a South Dakota license. C. Yes, but Mr. Garcia must refer the client to a South Dakota licensed agent. D. Only if the life insurance policy is offered by a company licensed in both North Dakota and South Dakota. The correct answer is B. No. Mr. Garcia cannot solicit business outside of North Dakota without a South Dakota license. Life insurance agents are typically licensed in a specific state. Mr. Garcia's North Dakota license does not authorize him to solicit business in South Dakota. To avoid legal repercussions, he cannot solicit this client and should recommend a life insurance agent licensed in South Dakota. Question 24. North Dakota requires insurers to deliver a replacement notice to policyholders whenever a replacement life insurance policy is recommended. What is the primary purpose of this requirement according to North Dakota regulations? A. To document the date and time of the replacement recommendation. B. To inform policyholders of their right to cancel the replacement policy. C. To provide details about the new policy's features and benefits. D. To obtain the policyholder's written consent for the replacement. The correct answer is B. To inform policyholders of their right to cancel the replacement policy. North Dakota mandates replacement notices to empower policyholders. The primary purpose is to inform them of their right to rescind, cancel, the replacement policy within a specific time frame, typically 10 or 20 days, after receiving the notice. This allows for informed decision-making and protects policyholders from potential pressure tactics. Question 25. A health insurance policyholder in North Dakota believes their claim has been wrongly denied by the insurer. According to North Dakota insurance regulations, what is the most appropriate initial course of action for the policyholder? A. File a lawsuit against the insurance company. B. Contact the North Dakota Department of Insurance, NDDOI, to file a complaint. C. Negotiate directly with the claims adjuster at the insurance company. D. Ignore the denial and resubmit the claim without any changes. The correct answer is B. Contact the North Dakota Department of Insurance, NDDOI, to file a complaint. North Dakota Department of Insurance, NDDOI, is the designated entity for handling insurance-related complaints. They can mediate disputes and ensure a fair claims process. Filing a complaint with the NDOI allows for a formal investigation before resorting to legal action. Question 26. Ms. Lee is a resident of North Dakota and is considering a Medicare supplement policy. North Dakota mandates guaranteed issue rights for these policies. What does guaranteed issue, in this context, mean for Ms. Lee? A. The insurance company cannot deny coverage based on her pre-existing conditions. B. The policy will cover all of Ms. Lee's medical expenses with no out-of-pocket costs. C. The premium will be guaranteed to remain the same throughout the life of the policy. D. Ms. Lee can choose any Medicare supplement plan offered in North Dakota. The correct answer is A. The insurance company cannot deny coverage based on her pre-existing conditions. Guaranteed issue, in the context of Medicare supplement policies in North Dakota, prohibits insurance companies from denying coverage or charging higher premiums based on a person's health status. This protects individuals with pre-existing conditions from being denied coverage. Question 27. North Dakota law requires continuing education for life and health insurance agents. The specific requirements and course content are determined by which entity? A. The National Association of Insurance Commissioners, NAIC. B. The specific insurance company the agent is contracted with. C. The North Dakota Department of Insurance, NDDOI. D. A designated professional organization chosen by the agent. The correct answer is C. The North Dakota Department of Insurance, NDDOI. The North Dakota Department of Insurance, NDDOI, is responsible for establishing and enforcing continuing education requirements for life and health insurance agents licensed in the state. This ensures agents maintain their knowledge and stay updated on industry regulations. Question 28. Ms. Peterson is a resident of North Dakota and is considering purchasing a long-term care insurance policy. According to North Dakota regulations, which of the following statements is most accurate regarding guaranteed renewal provisions in long-term care insurance policies? A. The insurer can cancel the policy at any time, with or without reason. B. Ms. Peterson can cancel the policy at any time, but the insurer cannot. C. The policy is guaranteed to be renewable as long as Ms. Peterson pays the premiums. D. Guaranteed renewal is only available for policies issued after a certain date set by North Dakota. The correct answer is C. The policy is guaranteed to be renewable as long as Ms. Peterson pays the premiums. North Dakota mandates that guaranteed renewal be a provision in all long-term care insurance policies issued in the state. This means the insurer cannot cancel the policy as long as Ms. Peterson pays the premiums on time and continues to meet the eligibility requirements. Question 29. Mr. Garcia is a life insurance agent licensed in North Dakota. He is presenting a new life insurance policy to a client. During the presentation, Mr. Garcia mentions that the policy includes a waiver of premium benefit due to disability. North Dakota law requires specific disclosures regarding this benefit. Which of the following scenarios describes a compliant action by Mr. Garcia? A. Mr. Garcia briefly mentions the waiver of premium benefit but does not provide any details about its limitations or exclusions. B. Mr. Garcia explains the waiver of premium benefit in detail but fails to provide a written copy of the policy with the complete benefit description. C. Mr. Garcia provides a clear explanation of the waiver of premium benefit, including its triggers, limitations, and exclusions, and ensures the client receives a copy of the policy with the complete benefit description. D. Mr. Garcia directs the client to the insurance company's website for information on the waiver of premium benefit. The correct answer is C. Mr. Garcia provides a clear explanation of the waiver of premium benefit, including its triggers, limitations, and exclusions, and ensures the client receives a copy of the policy with the complete benefit description. North Dakota mandates that agents disclose specific details about waiver of premium benefits in life insurance policies. This includes explaining the conditions that trigger the waiver, any limitations on the benefit amount or duration, and any exclusions that might apply. Additionally, the client should receive a copy of the policy document containing the complete benefit description. Question 30. A health insurance company is developing a new health insurance plan specifically designed for residents of North Dakota. The plan covers mental health services. North Dakota mandates mental health parity laws. How will these laws impact the design of the new health insurance plan regarding mental health benefits? A. The plan can offer different copay amounts for mental health services compared to other covered services. B. The plan can set annual or lifetime dollar limits on mental health benefits that are lower than those for other covered services. C. The plan benefits for mental health services must be substantially equivalent to the benefits for medical and surgical services. D. The plan can require stricter pre-authorization requirements for mental health services compared to other covered services. The correct answer is C. The plan benefits for mental health services must be substantially equivalent to the benefits for medical and surgical services. North Dakota mental health parity laws require health insurance plans to offer mental health benefits that are substantially equivalent to the benefits offered for medical and surgical services. This means the plan cannot impose stricter limitations, higher copays, or lower coverage levels for mental health services compared to other covered benefits. Question 31. Ms. Lee is a North Dakota resident applying for a Medicare supplement policy. She is concerned about potential replacement policies offered by her current insurer. According to North Dakota regulations, what rights does Ms. Lee have regarding replacement of her Medicare supplement policy? A. Ms. Lee has no right to refuse a replacement policy offered by her insurer. B. Ms. Lee can refuse a replacement policy, but the insurer can cancel her existing policy. C. Her insurer must provide a detailed notice explaining the key differences between her current policy and the replacement policy before any changes are made. D. Ms. Lee can keep her current policy indefinitely, regardless of new offerings from her insurer. The correct answer is C. Her insurer must provide a detailed notice explaining the key differences between her current policy and the replacement policy before any changes are made. North Dakota mandates that insurers provide clear and concise notices to policyholders before replacing their Medicare supplement policies. This notice should highlight the key differences between the existing policy and the proposed replacement, allowing Ms. Lee to make an informed decision. She has the right to refuse the replacement and keep her current policy. Question 32. Mr. Hernandez is a North Dakota resident and a senior citizen considering a long-term care insurance policy. He is concerned about the potential for inflation eroding the benefits over time. North Dakota allows for inflation protection riders on long-term care insurance policies. How do these riders typically work? A. The rider automatically increases the benefit amount every year by a fixed percentage. B. Mr. Hernandez can choose a specific inflation rate increase for the benefit amount. C. The rider requires additional premium payments to cover the increasing benefit amount. D. All options above are true. The correct answer is D. All options above are true. Inflation protection riders on long-term care insurance policies in North Dakota offer several benefits. These riders typically automatically increase the benefit amount every year by a fixed percentage or allow Mr. Hernandez to choose a specific inflation rate. Require additional premium payments to cover the rising cost of care due to inflation. By adding this rider, Mr. Hernandez can ensure his long-term care benefits keep pace with inflation and maintain their purchasing power over time. Question 33. A health insurance company licensed in North Dakota is developing a new individual health insurance plan. The plan offers coverage for prescription drugs. North Dakota requires certain consumer protections regarding prescription drug coverage. Which of the following actions would comply with these regulations? A. The plan can implement a tiered formulary that places certain medications on a higher tier with higher copays. B. The plan can deny coverage for any prescription drugs deemed to be for cosmetic purposes. C. The plan must provide a clear and understandable explanation of the formulary system, including tiers and cost-sharing requirements. D. The plan can require prior authorization for all prescription medications, regardless of medical necessity. The correct answer is C. The plan must provide a clear and understandable explanation of the formulary system, including tiers and cost-sharing requirements. North Dakota consumer protection regulations require health insurance plans offering prescription drug coverage to provide clear and understandable information about the plan's formulary. This includes explaining the different tiers within the formulary, associated cost-sharing requirements, like copays, for each tier, and the process for appealing formulary decisions. While tiered formularies and coverage limitations for cosmetic procedures might be implemented, the plan must ensure transparency and provide consumers with the necessary information to make informed decisions. Additionally, prior authorization requirements should be based on medical necessity, not a blanket policy. Question 34. Ms. Johnson is a North Dakota resident and a resident agent for a life insurance company. A client inquires about purchasing a universal life insurance policy. North Dakota mandates specific suitability standards for life insurance agents. How can Ms. Johnson ensure she is complying with these standards when recommending a universal life policy? A. Briefly explain the benefits of the universal life policy and encourage the client to apply. B. Focus solely on the premium amount and convince the client of its affordability. C. Conduct a needs analysis to understand the client's financial situation, risk tolerance, and long-term goals before recommending the policy. D. Highlight the investment features of the universal life policy and downplay the death benefit. The correct answer is C. conduct a needs analysis to understand the client's financial situation, risk tolerance, and long-term goals before recommending the policy. North Dakota requires life insurance agents to prioritize suitability when recommending policies. This means Ms. Johnson should conduct a thorough needs analysis to understand the client's specific needs and financial situation. By assessing factors like income, existing coverage, risk tolerance, and long-term goals, Ms. Johnson can determine if a universal life policy aligns with the client's best interests. Question 35. A health insurance company operating in North Dakota offers group health insurance plans to employers. The company plans to implement a wellness program for these groups. North Dakota has specific regulations regarding wellness programs in group health plans. Which of the following statements is most accurate regarding these regulations? A. The wellness program can offer significant premium discounts solely to participants who meet specific health goals. B. The wellness program can only offer minimal rewards or incentives for participation. C. The program design must be reasonably designed to improve health and qualify for any premium incentives. D. The wellness program cannot require participation from any employee in the group plan. The correct answer is C. The program design must be reasonably designed to improve health and qualify for any premium incentives. North Dakota allows wellness programs in group health plans, but with limitations. The program design must be reasonably designed to improve health, and any offered incentives, like premium discounts, cannot be excessive. This ensures the program is not discriminatory and encourages healthy behavior without penalizing those who choose not to participate. Question 36. Mr. Davis is a North Dakota resident diagnosed with a serious medical condition. He has a health insurance plan with a pre-existing condition exclusion clause. North Dakota has specific regulations regarding pre-existing condition exclusions. How will these regulations impact Mr. Davis's health insurance coverage? A. The pre-existing condition exclusion clause can be used to deny coverage for his current medical condition. B. North Dakota law prohibits health insurance plans from imposing pre-existing condition exclusions. C. Mr. Davis can only receive coverage for his condition after a specific waiting period mandated by state law. D. The regulations only apply to individual health insurance plans, not employer-sponsored plans. The correct answer is B. North Dakota law prohibits health insurance plans from imposing pre-existing condition exclusions. The Affordable Care Act, ACA, and North Dakota regulations prohibit health insurance plans from denying coverage or imposing pre-existing condition exclusions based on an individual's health status. This means Mr. Davis's plan cannot exclude coverage for his current medical condition. Question 37. Ms. Walker is a North Dakota resident considering a health insurance plan with a health savings account, HSA, option. North Dakota follows federal regulations regarding HSAs. To qualify for an HSA in conjunction with a high-deductible health plan, HDHP, which of the following requirements must Ms. Walker meet? A. Ms. Walker must be employed full-time by a company offering the HSA option. B. Ms. Walker cannot have any other health insurance coverage besides the HDHP. C. Ms. Walker cannot be claimed as a dependent on another person's tax return. D. All of the above are requirements for HSA qualification. The correct answer is D. All of the above are requirements for HSA qualification. North Dakota adheres to federal regulations for HSAs. To qualify for an HSA with an HDHP, Ms. Walker must meet all the following requirements. Be enrolled in an HDHP that meets minimum deductible and out-of-pocket expense thresholds set by the IRS. Not have other health insurance coverage besides the HDHP, with limited exceptions like accident-only or vision insurance. Not be claimed as a dependent on another person's tax return. Question 38. A health insurance company licensed in North Dakota is developing a new individual health insurance plan. The plan offers coverage for mental health services. North Dakota mandates continuing education requirements for agents selling accident and health insurance, including mental health topics. How can these continuing education (CE) requirements benefit insurance agents and consumers? A. Agents gain a deeper understanding of mental health conditions, improving communication with clients seeking mental health coverage. B. CE courses ensure agents can effectively sell different types of accident and health insurance products. C. Consumers have a wider range of agents to choose from when seeking coverage. D. CE requirements generate additional revenue for the North Dakota Department of Insurance. The correct answer is A. Agents gain a deeper understanding of mental health conditions, improving communication with clients seeking mental health coverage. North Dakota's CE requirements for accident and health insurance, including mental health topics, benefit both agents and consumers. By undergoing training on mental health conditions, treatments, and available coverage options, agents gain a deeper understanding of these issues. This allows them to better communicate with clients seeking mental health coverage, answer questions accurately, and recommend suitable plans. Question 39. Mr. Lopez is a North Dakota resident considering a disability income insurance policy. He is unsure about the tax implications of receiving benefits under such a policy. North Dakota follows federal tax regulations on disability income insurance benefits. How are these benefits typically taxed on the federal level? A. Disability income benefits are always taxed as income. B. Benefits are only taxed if Mr. Lopez paid premiums with after-tax dollars. C. Benefits are generally not taxed if the policy is purchased through his employer. D. Benefits are never taxed, regardless of the premium source. The correct answer is C. Benefits are generally not taxed if the policy is purchased through his employer. Federal tax regulations typically treat disability income benefits from employer-sponsored or employer-paid premiums as non-taxable income. This means Mr. Lopez would likely not owe taxes on these benefits if his employer provides or contributes to the disability income insurance policy. However, if Mr. Lopez purchases the policy independently and pays premiums with after-tax dollars, the benefits might be taxable. It's always best to consult with a tax professional for specific guidance. Question 40. A health insurance company operating in North Dakota offers individual health insurance plans. The company plans to implement a mandatory mail-order program for certain prescription drugs. North Dakota mandates specific regulations regarding mail-order prescriptions. Which of the following statements is most accurate regarding these regulations? A. The plan can require mail order for all prescription drugs on the formulary. B. The plan must allow members to choose between mail order and retail pharmacy options for covered medications. C. Members cannot request an exception to the mail order requirement for any reason. D. The plan design only needs to comply with federal, not state, mail order prescription regulations. The correct answer is B. The plan must allow members to choose between mail order and retail pharmacy options for covered medications. North Dakota consumer protection regulations require health insurance plans with mail order prescription programs to offer members a choice between mail order and retail pharmacy options for covered medications. This allows members to consider factors like convenience, cost, and personal preference when selecting how to obtain their prescriptions. Question 41. Mr. Garcia is a North Dakota resident approaching retirement and considering an annuity product. North Dakota mandates specific disclosure requirements regarding annuities. Which of the following actions by Mr. Garcia's agent would comply with these regulations? A. Briefly mention the annuity's potential benefits but avoid discussing surrender charges or tax implications. B. Explain the different types of annuities and their features in general terms but not personalize the details to Mr. Garcia's specific situation. C. Provide a clear explanation of the various annuity options available, considering Mr. Garcia's financial goals and risk tolerance, and disclose any surrender charges and potential tax implications associated with each option. D. Recommend a specific annuity product without considering Mr. Garcia's individual needs or investment experience. The correct answer is C. Provide a clear explanation of the various annuity options available, considering Mr. Garcia's financial goals and risk tolerance, and disclose any surrender charges and potential tax implications associated with each option. North Dakota disclosure requirements for annuities emphasize informing consumers about the product's features and potential drawbacks. A compliant agent like Mr. Garcia should explain different annuity types and their features, considering Mr. Garcia's goals and risk tolerance. Disclose any surrender charges, which are fees assessed if the annuity is withdrawn before a certain period. Discuss potential tax implications based on the chosen annuity type and how withdrawals might be taxed. This ensures Mr. Garcia makes an informed decision based on a comprehensive understanding of the product. Question 42. A health insurance company operating in North Dakota offers group health insurance plans. The company wants to implement a telemedicine program as part of the plan benefits. North Dakota has regulations regarding coverage for telehealth services. How will these regulations likely impact the design of the telemedicine program? A. The program can restrict access to certain specialists or require referrals for all telemedicine consultations. B. The program must ensure coverage for consultations with any out-of-state licensed healthcare provider via telemedicine. C. The program design should prioritize cost-effectiveness and offer coverage for a broad range of telemedicine services. D. Telemedicine consultations cannot be used to fulfill any deductible or copay requirements. The correct answer is C. The program design should prioritize cost-effectiveness and offer coverage for a broad range of telemedicine services. North Dakota regulations typically encourage access to telehealth services within group health plans. The program design should likely prioritize cost-effectiveness by offering telemedicine as a substitute for appropriate in-person consultations when feasible. Cover a broad range of telemedicine services, potentially including consultations with various specialists depending on the plan design. However, restrictions on specific specialists or requiring referrals for all consultations might be implemented, but these limitations should be reasonable and not hinder access to necessary care. Question 43. Ms. Lee is a North Dakota resident and a senior citizen considering a Medicare supplement policy. She is concerned about the policy's grievance process if she has a disagreement with the insurance company regarding a claim denial. North Dakota mandates specific procedures for handling consumer complaints regarding health insurance. What steps can Ms. Lee typically take if she disagrees with a claim denial from her Medicare supplement insurer? A. Ms. Lee has no recourse and must accept the claim denial. B. She can directly file a lawsuit against the insurance company in court. C. Ms. Lee should first file a formal complaint with the North Dakota Department of Insurance. D. Ms. Lee can appeal the decision directly to the Medicare program. The correct answer is C. Ms. Lee should first file a formal complaint with the North Dakota Department of Insurance. North Dakota mandates a grievance process for resolving consumer complaints regarding health insurance, including Medicare supplement plans. If Ms. Lee disagrees with a claim denial, she should file a formal complaint with the North Dakota Department of Insurance. This department has a dedicated team to handle insurance-related consumer complaints. The department will investigate the complaint and attempt to mediate a resolution between Ms. Lee and the insurance company. If the complaint remains unresolved, Ms. Lee might have the option to pursue further avenues like external arbitration or legal action depending on the specific situation. Question 44. Ms. Lee is a resident of North Dakota and is considering purchasing a long-term care insurance policy. She is concerned about the potential for premium increases in the future. Which of the following statements is most accurate regarding premium increases for long-term care insurance policies in North Dakota? A. North Dakota law prohibits any premium increases for long-term care insurance policies. B. Long-term care insurance carriers in North Dakota are required to offer guaranteed cost policies with level premiums. C. North Dakota requires long-term care insurance carriers to file for approval with the Department of Insurance before raising premiums. D. Long-term care insurance policies in North Dakota are subject to premium increases based on factors such as the insured's age and claims experience. The correct answer is C. North Dakota requires long-term care insurance carriers to file for approval with the Department of Insurance before raising premiums. North Dakota requires long-term care insurance carriers to file for approval with the North Dakota Department of Insurance, NDDOI, before raising premiums. This filing allows the NDOI to review the proposed increase and ensure it is justified based on factors such as claims experience, mortality rates, and reinsurance costs. While there is no guarantee that premiums will never increase, this regulation provides some consumer protection. Question 45. Mr. Garcia is a life insurance agent licensed in North Dakota. He is working with a client who is interested in purchasing a universal life insurance policy. Mr. Garcia explains that universal life insurance policies offer flexible premiums and the potential for cash value accumulation. However, the client is concerned about the risk of policy lapse if they are unable to pay the premiums. According to North Dakota regulations, what is Mr. Garcia's responsibility regarding informing the client about policy lapse? A. Mr. Garcia does not need to discuss policy lapse with the client unless they specifically ask about it. B. Mr. Garcia must explain the concept of policy lapse but is not required to discuss specific consequences. C. Mr. Garcia needs to explain the concept of policy lapse and the potential financial implications, including loss of coverage and cash value. D. Mr. Garcia should advise the client against purchasing a universal life insurance policy due to the lapse risk. The correct answer is C. Mr. Garcia needs to explain the concept of policy lapse and the potential financial implications, including loss of coverage and cash value. North Dakota requires life insurance agents to act in the best interests of their clients. This includes disclosing material information about the products they sell. In the case of universal life insurance, explaining the risk of policy lapse and its potential consequences is crucial for informed decision-making. Mr. Garcia should discuss options such as grace periods, policy loans, and reduced paid-up benefits that may help prevent lapse. Question 46. A North Dakota health insurance company is developing a new health insurance plan that excludes coverage for certain mental health conditions. The company believes this exclusion is necessary to keep premiums affordable. However, before implementing the plan, the company needs to comply with North Dakota's mental health parity laws. Which of the following statements is true regarding mental health parity in North Dakota? A. North Dakota has no mental health parity laws, and insurers can freely exclude coverage for mental health conditions. B. North Dakota requires mental health benefits to be identical to medical, surgical benefits in terms of financial requirements and treatment limitations. C. North Dakota's mental health parity laws allow insurers to exclude coverage for certain mental health conditions as long as the exclusions are justified. D. North Dakota requires mental health benefits to be offered, but insurers can set different annual or lifetime dollar limits for mental health compared to medical, surgical benefits. The correct answer is D. North Dakota requires mental health benefits to be offered, but insurers can set different annual or lifetime dollar limits for mental health compared to medical, surgical benefits. North Dakota has mental health parity laws that require insurers to offer mental health benefits. However, these laws allow insurers to set different annual or lifetime dollar limits for mental health compared to medical, surgical benefits. This means the new plan can have a lower dollar limit for mental health coverage, but it cannot completely exclude coverage for certain mental health conditions. Question 47. Ms. Johnson is a resident of North Dakota and is considering purchasing a Medicare supplement policy, Medigap. She is aware that Medigap plans are standardized and follow specific benefit packages designated by letters A through N. Ms. Johnson wants a plan that covers the Part B deductible and some of the out-of-pocket costs for hospitalization. Which Medigap plan would likely be the best fit for her needs? A. Medigap Plan A, Basic Hospital. B. Medigap Plan F, High Deductible Option. C. Medigap Plan G, Medigap with benefits for physician services. D. Medigap Plan K, High Deductible Option with extra benefits. The correct answer is C. Medigap Plan G, Medigap with benefits for physician services. North Dakota follows the standardized Medigap plans outlined by the federal government. Medigap Plan A covers the Part B deductible but does not cover much of the out-of-pocket costs for hospitalization. Eliminate A. Medigap Plans F and K are popular but have high deductibles before the plan starts paying benefits. Eliminate B and D. Medigap Plan G covers the Part B deductible and some additional out-of-pocket costs for hospitalization, making it a good fit for Ms. Johnson's needs. Question 48. Mr. Hernandez is a life insurance agent licensed in North Dakota. He is contacted by a potential client who wants to purchase a life insurance policy on their grandchild. Mr. Hernandez knows that there are regulations regarding the insurable interest for life insurance policies in North Dakota. Can Mr. Hernandez sell a life insurance policy to Mr. Hernandez's client on their grandchild? A. Yes. Mr. Hernandez can sell the policy as long as the grandchild is named as the beneficiary. B. Yes. Mr. Hernandez can sell the policy with a minimal death benefit amount. C. No. Mr. Hernandez cannot sell the policy unless the client can demonstrate an insurable interest in the grandchild's life. D. No. Mr. Hernandez cannot sell the policy because life insurance cannot be purchased on minors in North Dakota. The correct answer is C. No. Mr. Hernandez cannot sell the policy unless the client can demonstrate an insurable interest in the grandchild's life. North Dakota, like most states, has insurable interest laws for life insurance. This law requires the policyholder to have a financial stake in the insured's life. In the case of a grandparent-grandchild relationship, there is generally not a strong enough insurable interest unless there are special circumstances. Eliminate A and B. Option D is partially true. While there may be age restrictions for certain life insurance products, it's the insurable interest that's the key factor here. Mr. Hernandez cannot sell the policy unless the client can demonstrate a legitimate financial reason for insuring the grandchild's life, such as dependence on the grandchild for financial support. Question 49. An accident and health insurance company in North Dakota is developing a new individual health insurance policy. The policy includes a rescission clause that allows the insurer to cancel the policy within a certain time frame if they discover misrepresentations on the application. According to North Dakota regulations, what are some limitations on the use of rescission clauses in accident and health insurance policies? A. There are no limitations. The insurer can rescind the policy at any time for any misrepresentation. B. The insurer can only rescind the policy if the misrepresentation is material to the risk of insuring the applicant. C. The insurer can only rescind the policy within the first 6 months after the policy is issued, regardless of the misrepresentation. D. The insurer cannot rescind the policy based on misrepresentations made by the agent, only those made by the applicant. The correct answer is B. The insurer can only rescind the policy if the misrepresentation is material to the risk of insuring the applicant. North Dakota allows rescission clauses in accident and health insurance policies, but with limitations. Insurers can only rescind the policy if the misrepresentation on the application is material to the risk of insuring the applicant. This means the misrepresentation must have a significant impact on the insurer's decision to issue the policy or the premium charged. Options C and D highlight some limitations that may exist but are not universally applicable in North Dakota. Question 50. Ms. Davis is a North Dakota resident approaching retirement and is considering purchasing an annuity. She is interested in guaranteed income for life. Which of the following annuity options would best suit her needs? A. Term certain annuity. B. Immediate annuity with a life income benefit. C. Deferred annuity with a lump sum withdrawal option. D. Variable annuity with a lifetime income rider. The correct answer is B. Immediate annuity with a life income benefit. Term certain annuities provide income for a set period, not for life. Eliminate A. Deferred annuities are designed for accumulation, not immediate income. Eliminate C. Variable annuities have market fluctuations and may not guarantee lifetime income. Eliminate D. An immediate annuity with a life income benefit provides guaranteed income payments for Ms. Davis's entire lifetime, aligning with her goal. Question 51. Mr. Khan is a health insurance agent licensed in North Dakota. He is explaining the concept of replacement to a client who is considering switching health insurance plans. North Dakota has adopted the National Association of Insurance Commissioners, NAIC, Model Replacement Regulation. What does Mr. Khan need to disclose to the client regarding replacement? A. He only needs to disclose the new plan's benefits and premiums. B. He must explain the potential loss of benefits or pre-existing condition exclusions in the new plan compared to the old plan. C. He should recommend keeping the existing plan unless the new plan offers significantly lower premiums. D. He does not need to disclose anything about replacement as long as the client signs a waiver. The correct answer is B. He must explain the potential loss of benefits or pre-existing condition exclusions in the new plan compared to the old plan. North Dakota follows the NAIC Model Replacement Regulation, which requires agents to disclose material information to clients considering replacing their health insurance plans. This includes potential disadvantages of the new plan, such as loss of benefits or limitations on coverage for pre-existing conditions compared to the existing plan. Eliminate A and C. Mr. Khan should provide a fair comparison and avoid pressuring the client. Eliminate D. Question 52. A North Dakota health insurance company offers a group health insurance plan with a prescription drug benefit. The plan has a formulary that lists covered medications. A plan member argues that a specific medication they need is not on the formulary and should be covered. North Dakota has a mandated access provision for certain non-formulary drugs. What factors would be considered when determining if the plan must cover the non-formulary medication? A. Only the cost of the medication compared to formulary alternatives. B. The member's medical condition and the medication's effectiveness compared to formulary alternatives. C. The member's age and history of using the medication. D. The availability of the medication in pharmacies within the plan's network. The correct answer is B. The member's medical condition and the medication's effectiveness compared to formulary alternatives. North Dakota's mandated access provision allows plan members to request coverage for non-formulary medications under certain conditions. The key factors considered are the member's medical condition and whether the medication is medically necessary for their treatment, the effectiveness of the non-formulary medication compared to formulary alternatives. Options C and D may be relevant but are not the primary factors for coverage under mandated access. Question 53. Ms. Lopez is a resident of North Dakota and is considering applying for long-term care insurance. She is concerned about the possibility of being denied coverage due to pre-existing health conditions. North Dakota has adopted the National Association of Health Underwriters, NAHU, Long-Term Care Insurance Model Act. What limitations are there on health status questions used in long-term care insurance applications in North Dakota? A. Insurers can ask any questions about the applicant's health history. B. Insurers can deny coverage based solely on pre-existing health conditions. C. Insurers are limited to asking about specific health conditions that are directly related to the applicant's ability to perform activities of daily living, ADLs. D. Insurers cannot deny coverage for long-term care, regardless of the applicant's health status. The correct answer is C. Insurers are limited to asking about specific health conditions that are directly related to the applicant's ability to perform activities of daily living, ADLs. North Dakota follows the NAHU Long-Term Care Insurance Model Act, which restricts the use of health status questions in long-term care applications. Insurers can only ask about specific health conditions that are directly relevant to the applicant's ability to perform ADLs, such as bathing, dressing, and eating. Question 54. Ms. Lee is a resident of North Dakota and is considering purchasing a critical illness insurance policy. She wants to understand the benefits offered by such a policy. Which of the following statements is most accurate regarding critical illness insurance policies? A. Critical illness insurance policies provide a death benefit to the beneficiary upon the policyholder's death. B. Critical illness insurance policies reimburse the policyholder for medical expenses incurred due to a covered critical illness. C. Critical illness insurance policies pay a lump sum benefit to the policyholder upon diagnosis of a covered critical illness. D. Critical illness insurance policies offer long-term care services for policyholders diagnosed with critical illnesses. The correct answer is C. Critical illness insurance policies pay a lump sum benefit to the policyholder upon diagnosis of a covered critical illness. Critical illness insurance policies are designed to provide a lump sum cash benefit to the policyholder upon diagnosis of a covered critical illness, such as cancer, heart attack, or stroke. This benefit can be used to cover various expenses related to the illness, such as lost income, medical bills not covered by other insurance, or out-of-pocket costs. Options A, B, and D represent features of other types of insurance products. Question 55. Mr. Garcia is a life insurance agent licensed in North Dakota. He is working with a client who is interested in purchasing a variable universal life insurance policy. Mr. Garcia explains the features of the policy, including the potential for cash value growth and death benefit payout. He also needs to discuss the risks associated with variable universal life insurance. Which of the following risks is most important for Mr. Garcia to highlight to the client? A. The risk of the policy lapsing if premiums are not paid on time. B. The risk of the death benefit being less than the total premiums paid if the policyholder dies early. C. The risk of fluctuations in the investment performance of the variable subaccounts underlying the cash value. D. The risk of the insurance company going bankrupt and failing to pay the death benefit. The correct answer is C. The risk of fluctuations in the investment performance of the variable subaccounts underlying the cash value. Variable universal life insurance policies link the cash value growth and death benefit to the performance of underlying investment subaccounts. While all the risks listed, A, B, and D, are present in various life insurance products, the key risk associated with variable universal life is the fluctuation in the investment performance. Mr. Garcia should explain how market downturns could negatively impact the cash value and potentially the death benefit payout. Question 56. A health insurance company in North Dakota offers individual health insurance plans. The company wants to develop a new plan that excludes coverage for adult dental services. North Dakota has a mandate for certain benefits in individual health insurance plans. Does North Dakota require individual health insurance plans to cover adult dental services? A. Yes, North Dakota mandates coverage for adult dental services in all individual health insurance plans. B. No, North Dakota does not mandate any specific benefits for individual health insurance plans. C. It depends on the plan design. Some plans in North Dakota may offer adult dental coverage as an optional benefit. D. The answer depends on the age of the applicant. Adult dental coverage may only be mandated for younger adults. The correct answer is B. No, North Dakota does not mandate any specific benefits for individual health insurance plans. Unlike some states with mandated benefits for individual health insurance plans, North Dakota does not currently mandate coverage for adult dental services. This means insurers have more flexibility in designing individual plans and may offer adult dental coverage as an optional add-on benefit, option C. However, the absence of a mandate doesn't necessarily mean plans will exclude it altogether. Question 57. Ms. Johnson is a resident of North Dakota and is considering applying for disability income insurance. She wants to understand the concept of an elimination period in disability insurance policies. What does the elimination period refer to in disability income insurance? A. The period during which the policyholder must pay premiums before coverage begins. B. The waiting period after a disability occurs before benefits start to be paid. C. The maximum time frame during which the insurance company will pay benefits for a disability. D. The period after a policy lapse during which the policy can be reinstated. The correct answer is B. The waiting period after a disability occurs before benefits start to be paid. The elimination period in disability income insurance refers to the waiting period after a disability occurs before the insurance company starts paying benefits. This period is designed to prevent the policy from being used for short-term illnesses or injuries. Options A, C, and D describe different concepts in insurance policies. Question 58. Mr. Hernandez is a health insurance agent licensed in North Dakota. He is contacted by a potential client who wants to purchase a health insurance plan for their business. Mr. Hernandez should be aware of North Dakota's regulations regarding mandated benefits for small employer health plans. Does North Dakota mandate certain benefits for small employer health plans? A. Yes, North Dakota mandates a specific set of benefits that all small employer health plans must cover. B. No, North Dakota does not mandate any specific benefits for small employer health plans. C. It depends on the plan size. Mandates may apply to plans covering a certain number of employees. D. Mandated benefits only apply to individual health insurance plans, not employer-sponsored plans. The correct answer is B. No, North Dakota does not mandate any specific benefits for small employer health plans. Unlike some states with mandated benefits for small employer health plans, North Dakota does not currently have such mandates. This gives employers more flexibility in designing health insurance plans for their employees, option B. However, federal mandates, such as those under the Affordable Care Act, ACA, may still apply to certain plan features. Question 59. An accident and health insurance company in North Dakota offers a Medicare supplement policy, Medigap, plan. The plan has a pre-existing condition exclusion that denies coverage for certain medical conditions if the applicant had them before enrolling in the plan. Are pre-existing condition exclusions allowed in Medigap plans under North Dakota regulations? A. Yes, Medigap plans in North Dakota are allowed to have pre-existing condition exclusions. B. No, Medigap plans are standardized by the federal government and cannot have pre-existing condition exclusions. C. Pre-existing condition exclusions are allowed in Medigap plans with limited scope as defined by North Dakota regulations. D. The answer depends on the applicant's age. Pre-existing condition exclusions may only apply to younger applicants. The correct answer is B. No, Medigap plans are standardized by the federal government and cannot have pre-existing condition exclusions. Medigap plans are standardized by federal regulations and are not subject to state variations. One key feature of standardized Medigap plans is the guaranteed issue right, which prohibits insurers from denying coverage or applying pre-existing condition exclusions, option B. This ensures access to supplemental coverage for Medicare beneficiaries regardless of their health history. Options A, C, and D highlight possibilities that may exist with other types of health insurance plans but not with standardized Medigap plans. Question 60. Ms. Davis is a resident of North Dakota and is considering applying for long-term care insurance. She is concerned about the cost of premiums and wants to explore options to make the policy more affordable. Which of the following strategies might help Ms. Davis lower her long-term care insurance premiums? A. Choosing a plan with a lower daily benefit amount. B. Selecting a plan with a longer elimination period. C. Opting for a graded premium payment structure. D. All of the above strategies could potentially lower Ms. Davis's premiums. The correct answer is D. All of the above strategies could potentially lower Ms. Davis's premiums. All of the listed strategies can potentially help Ms. Davis lower her long-term care insurance premiums. Choosing a plan with a lower daily benefit amount. The daily benefit amount represents the amount the policy will pay towards her daily care expenses. A lower benefit amount translates to lower premiums. Selecting a plan with a longer elimination period. The elimination period is the waiting time after a qualifying event before benefits begin. A longer elimination period means the insurance company pays out later, reducing their risk and potentially lowering premiums. Opting for a graded premium payment structure. A graded premium structure has premiums that increase over time. While this may seem counterintuitive, it can be initially cheaper compared to a level premium plan with constant premiums throughout the policy term. Question 61. Mr. Khan is a life insurance agent licensed in North Dakota. He is contacted by a client who wants to cancel their existing life insurance policy and purchase a new one. Mr. Khan should be aware of North Dakota's Unfair Trade Practices Act. How does the Unfair Trade Practices Act impact life insurance replacement in North Dakota? A. The Act prohibits life insurance replacement altogether. B. The Act requires life insurance agents to disclose any compensation they receive for selling new policies. C. The Act mandates a cooling-off period before a new policy can be issued after canceling an existing one. D. The Act does not apply to life insurance replacement activities. The correct answer is B. The Act requires life insurance agents to disclose any compensation they receive for selling new policies. North Dakota, like most states, likely has an Unfair Trade Practices Act that prohibits deceptive or misleading practices in the insurance industry. In the context of life insurance replacement, this may include a requirement for agents to disclose any compensation they receive for selling new policies, commissions, bonuses, etc. This helps ensure transparency and protects consumers from being pressured into replacing a suitable existing policy with a less beneficial one. Options A, C, and D represent possibilities but may not be universally applicable in North Dakota. Question 62. A health insurance company in North Dakota offers a group health insurance plan that covers mental health services. A plan member argues that the network of mental health providers is limited and geographically inconvenient. North Dakota has a network adequacy provision for health insurance plans. What factors would be considered when determining if the network is adequate? A. Only the number of mental health providers compared to the plan's enrollment. B. The number, qualifications, and geographic distribution of mental health providers in the network. C. The members' satisfaction with the available mental health providers. D. The cost of in-network mental health services compared to out-of-network providers. The correct answer is B. The number, qualifications, and geographic distribution of mental health providers in the network. Network adequacy provisions ensure that health insurance plans offer a sufficient network of providers to meet the needs of their enrollees. In North Dakota, when evaluating the adequacy of the mental health provider network, key factors include the number of mental health providers available in the network, the qualifications and expertise of the providers to address various mental health conditions, the geographic distribution of providers to ensure reasonable access for plan members. Options A, C, and D may be relevant considerations, but they are not the primary focus of network adequacy provisions. Question 63. Ms. Lopez is a resident of North Dakota and is considering purchasing a cancer insurance policy. She wants to understand the benefits offered by such a policy. Which of the following statements is most accurate regarding cancer insurance policies? A. Cancer insurance policies provide a lump sum death benefit to the beneficiary upon the policyholder's death from cancer. B. Cancer insurance policies reimburse the policyholder for all medical expenses incurred due to a cancer diagnosis. C. Cancer insurance policies pay a fixed benefit amount upon diagnosis of a covered cancer, regardless of the treatment costs. D. Cancer insurance policies offer long-term care services specifically for cancer patients. The correct answer is C. Cancer insurance policies pay a fixed benefit amount upon diagnosis of a covered cancer, regardless of the treatment costs. Cancer insurance policies are designed to provide a fixed benefit amount upon diagnosis of a covered cancer, regardless of the actual treatment costs. This benefit can be used to cover various expenses related to the illness, such as out-of-pocket costs, lost wages, or childcare. Options A, B, and D represent features of other types of insurance products. Question 64. Mr. Garcia is a life insurance agent licensed in North Dakota. He is working with a client who is interested in purchasing a term life insurance policy. Mr. Garcia explains the features of term life insurance, including its affordability and temporary coverage period. He should also discuss the limitations of term life insurance. Which of the following limitations is most important for Mr. Garcia to highlight to the client? A. The cash value accumulation potential, which is typically lower compared to whole life insurance. B. The risk of the policy lapsing if premiums are not paid on time, resulting in loss of coverage. C. The limited death benefit payout, which is only available if the policyholder dies within the term period. D. The potential for premium increases upon renewal of the term life insurance policy. The correct answer is C. The limited death benefit payout, which is only available if the policyholder dies within the term period. Term life insurance offers affordable coverage for a specific period, term. The key limitation is that the death benefit is only paid if the insured dies within the term. If the policyholder outlives the term, the policy expires with no return on premiums paid. While all the limitations listed, A, B, and D, are relevant, highlighting the potential loss of coverage if the insured outlives the term is crucial. Question 65. A health insurance company in North Dakota offers individual health insurance plans. The company wants to develop a new plan that excludes coverage for maternity and childbirth services. North Dakota has mandated benefits for certain services in individual health insurance plans. Does North Dakota require individual health insurance plans to cover maternity and childbirth services? A. North Dakota mandates coverage for maternity and childbirth services in all individual health insurance plans. B. No, North Dakota does not mandate coverage for maternity and childbirth services in individual plans. C. It depends on the plan design. Some plans may offer maternity coverage as an optional benefit. D. The answer depends on the woman's age. Maternity coverage may only be mandated for women of childbearing age. The correct answer is A. North Dakota mandates coverage for maternity and childbirth services in all individual health insurance plans. North Dakota, like many states, likely has mandated benefits for certain services in individual health insurance plans. Maternity and childbirth services are often included in these mandated benefits. This means the insurance company cannot exclude coverage for these services in their individual plans. Option A. While some flexibility may exist in plan design, Option C, mandated benefits ensure basic coverage for essential services. Option B is unlikely, and Option D doesn't reflect typical mandates based on age. Question 66. Ms. Johnson is a resident of North Dakota and is considering applying for accident insurance. She wants to understand the benefits offered by accident insurance. Which of the following statements is most accurate regarding accident insurance policies? A. Accident insurance policies provide a death benefit to the beneficiary upon the policyholder's death from any cause. B. Accident insurance policies reimburse the policyholder for all medical expenses incurred due to an accident. C. Accident insurance policies pay a benefit for accidental injuries, regardless of the severity or resulting medical expenses. D. Accident insurance policies offer long-term care services specifically for accident victims. The correct answer is C. Accident insurance policies pay a benefit for accidental injuries, regardless of the severity or resulting medical expenses. Accident insurance policies are designed to provide a benefit for accidental injuries, regardless of the severity or resulting medical expenses. This benefit can be a lump sum payout or a daily benefit to help cover lost wages or other expenses incurred due to the accident. Options A, B, and D represent features of other types of insurance products. Question 67. Mr. Hernandez is a health insurance agent licensed in North Dakota. He is contacted by a potential client who wants to purchase a health insurance plan with a health savings account, HSA. Mr. Hernandez should be aware of the eligibility requirements for HSAs. What are some of the key requirements for an individual to be eligible to contribute to an HSA? A. The individual must be enrolled in a high-deductible health plan, HDHP, as defined by the IRS. B. The individual cannot have any other health insurance plan that provides coverage beyond preventive services. C. The individual must be under a certain age limit to qualify for an HSA. D. The individual cannot have any pre-existing medical conditions. The correct answer is A. The individual must be enrolled in a high-deductible health plan, HDHP, as defined by the IRS. To be eligible to contribute to an HSA, the main requirement is to be enrolled in a high-deductible health plan, HDHP, as defined by the Internal Revenue Service, IRS. HDHPs have lower premiums but higher deductibles, meaning the policyholder pays more out of pocket before the insurance starts paying benefits. Options B, C, and D may be limitations for certain health insurance plans but are not generally eligibility restrictions for HSAs. Question 68. A life insurance company in North Dakota offers a universal life insurance policy. The policy allows the policyholder to pay premiums that exceed the current mortality and expense charges. This excess premium payment helps build the policy's cash value. However, the policy also includes a surrender charge if the policyholder withdraws cash value before a certain time frame. What is the purpose of a surrender charge in a universal life insurance policy? A. To penalize policyholders for not paying enough premium. B. To discourage policyholders from withdrawing cash value early, potentially jeopardizing the policy's long-term value. C. To generate additional revenue for the insurance company. D. To offset the administrative costs associated with processing withdrawals. The correct answer is B. To discourage policyholders from withdrawing cash value early, potentially jeopardizing the policy's long-term value. A surrender charge in a universal life insurance policy discourages policyholders from withdrawing cash value early in the policy's life. Early withdrawals can significantly reduce the cash value accumulation potential and potentially jeopardize the policy's ability to provide the desired death benefit. This discourages using the cash value as a short-term solution and encourages long-term commitment to the policy. Option B. Options A, C, and D may be secondary effects, but the primary purpose is to incentivize long-term policy ownership. Question 69. Ms. Peterson is a resident of North Dakota and is considering purchasing a long-term care insurance policy. According to North Dakota regulations, which of the following statements is most accurate regarding guaranteed renewal provisions in long-term care insurance policies? A. The insurer can cancel the policy at any time, with or without reason. B. Ms. Peterson can cancel the policy at any time, but the insurer cannot. C. The policy can only be canceled by the insurer for non-payment of premiums. D. The policy is guaranteed renewable as long as Ms. Peterson pays the premiums and remains eligible under the policy terms. The correct answer is D. The policy is guaranteed renewable as long as Ms. Peterson pays the premiums and remains eligible under the policy terms. North Dakota requires insurers to offer guaranteed renewable long-term care insurance policies. This means that Ms. Peterson can continue renewing the policy as long as she pays the premiums and meets the eligibility requirements outlined in the policy, regardless of her health status. Question 70. Mr. Lee is a life insurance agent licensed in North Dakota. He is contacted by a potential client who resides in South Dakota. Can Mr. Lee solicit life insurance business from this client? A. Yes, Mr. Lee can solicit business from anyone regardless of their location. B. Yes, but only if the life insurance policy is offered by a company licensed in both North Dakota and South Dakota. C. No, Mr. Lee cannot solicit business from someone residing outside of North Dakota. D. No, but Mr. Lee can refer the client to a life insurance agent licensed in South Dakota. The correct answer is C. No, Mr. Lee cannot solicit business from someone residing outside of North Dakota. Life insurance agents are typically licensed to sell insurance in the state where they reside. Mr. Lee's license is only valid in North Dakota. Therefore, he cannot solicit life insurance business from someone residing in South Dakota. Question 71. North Dakota has specific requirements regarding replacement of life insurance policies. Which of the following statements is true regarding replacement in North Dakota? A. The replacing insurer has no obligation to provide a written disclosure to the policyholder. B. The policyholder is required to receive a written disclosure outlining the features of both the existing and replacement policies. C. North Dakota has no regulations regarding replacement of life insurance. D. The replaced policy must be older than 5 years to qualify for replacement. The correct answer is B. The policyholder is required to receive a written disclosure outlining the features of both the existing and replacement policies. North Dakota requires insurers to provide a written disclosure to the policyholder when replacing a life insurance policy. This disclosure document should outline the features of both the existing and replacement policies, allowing the policyholder to make an informed decision. Question 72. Mrs. Garcia is a resident of North Dakota and is considering purchasing a health insurance policy. North Dakota mandates minimum health insurance standards. Which of the following benefits is not required to be covered under a guaranteed issue health insurance policy in North Dakota? A. Mental health treatment. B. Substance abuse treatment. C. Preventive care services. D. Hospital room and board charges. The correct answer is B. Substance abuse treatment. North Dakota mandates guaranteed issue health insurance policies to cover essential health benefits, including preventive care services, mental health treatment, and hospital room and board charges. Substance abuse treatment, while crucial, is not specifically mandated under North Dakota's guaranteed issue health insurance standards. Question 73. Mr. Anderson is a North Dakota resident who holds a Medicare supplement policy. He becomes unhappy with the service he receives from his current insurer. North Dakota law grants him specific rights regarding cancellation of Medicare supplement policies. What is the maximum cancellation period for a Medicare supplement policy in North Dakota, following its initial purchase? A. There is no cancellation period. Mr. Anderson can cancel anytime. B. Mr. Anderson can cancel within 30 days of receiving the policy. C. Mr. Anderson can cancel within 6 months of receiving the policy. D. Medicare supplement policies cannot be canceled by the policyholder. The correct answer is C. Mr. Anderson can cancel within 6 months of receiving the policy. North Dakota allows for a guaranteed cancellation period for Medicare supplement policies following their initial purchase. This period is typically 6 months, allowing Mr. Anderson to cancel the policy and potentially find a new insurer that better suits his needs. Question 74. North Dakota has specific regulations regarding unfair trade practices in the insurance industry. Which of the following actions would be considered an unfair trade practice according to North Dakota law? A. An insurer denies a health insurance claim based on a pre-existing condition, following proper disclosure by the policyholder. B. An insurer increases premiums for a specific policyholder group based on their claims history. C. An insurer offers discounts on premiums for healthy individuals. D. An insurer fails to disclose all policy limitations and exclusions at the time of sale. The correct answer is D. An insurer fails to disclose all policy limitations and exclusions at the time of sale. North Dakota, like most states, prohibits unfair trade practices in the insurance industry. Failing to disclose all policy limitations and exclusions at the time of sale is considered misleading and deceptive, violating fair trade practices. Question 75. Ms. Davis is a North Dakota resident considering purchasing a long-term care insurance policy. North Dakota mandates specific consumer protections regarding long-term care insurance. Which of the following statements is not a guaranteed consumer protection under North Dakota law for long-term care insurance policies? A. The policy cannot be canceled by the insurer solely because the insured files a claim. B. The insured has the right to return the policy and receive a full refund within a specific period after purchase. C. The policy must offer inflation protection benefits to keep pace with rising healthcare costs. D. The insurer can deny coverage based on pre-existing health conditions. The correct answer is D. The insurer can deny coverage based on pre-existing health conditions. North Dakota consumer protections for long-term care insurance guarantee renewability as long as premiums are paid and eligibility requirements are met. They also offer a guaranteed refund period and protection against cancellation solely due to claims. However, pre-existing health conditions can be a reason for denial of coverage underwritten long-term care policies. Question 76. Mr. Hernandez is a life insurance agent licensed in North Dakota. He is explaining the concept of insurable interest to a potential client. According to North Dakota law, which of the following scenarios would demonstrate an insurable interest in another person's life? A. Mr. Hernandez has a close friendship with the client's spouse. B. The client wants to purchase a life insurance policy on their business partner. C. The client wants to purchase a life insurance policy on their neighbor. D. The client wants to purchase a life insurance policy on a famous celebrity. The correct answer is B. The client wants to purchase a life insurance policy on their business partner. Insurable interest refers to a financial stake in the continued life of another person. In North Dakota, a business partner has an insurable interest in their partner's life due to potential financial loss if the partner dies. Question 77. North Dakota has specific requirements regarding continuing education for insurance agents. Which of the following statements is true regarding continuing education in North Dakota? A. There is no continuing education requirement for life and health insurance agents in North Dakota. B. All life and health insurance agents in North Dakota must complete 40 hours of continuing education every 2 years. C. Only new agents in North Dakota are required to complete continuing education courses. D. The specific continuing education requirements vary depending on the type of insurance license held. The correct answer is D. The specific continuing education requirements vary depending on the type of insurance license held. North Dakota does require continuing education for life and health insurance agents. However, the specific number of credit hours and course content may vary depending on the type of license held. Question 78. Ms. Lee is a North Dakota resident diagnosed with a serious medical condition. She inquires about purchasing an individual health insurance policy. North Dakota has specific regulations regarding guaranteed issuance of health insurance in such cases. What is the most accurate statement regarding guaranteed issuance in North Dakota? A. Ms. Lee is guaranteed to be approved for any individual health insurance policy she applies for. B. Guaranteed issuance does not apply to Ms. Lee's situation. She may be denied coverage based on her health status. C. Ms. Lee is guaranteed issuance, but only for specific types of health insurance plans offered by the insurer. D. Ms. Lee is guaranteed issuance, but she may face higher premiums due to her pre-existing condition. The correct answer is C. Ms. Lee is guaranteed issuance, but only for specific types of health insurance plans offered by the insurer. North Dakota has guaranteed issuance for certain health insurance plans. While Ms. Lee may not be guaranteed coverage for any plan offered by an insurer, she is guaranteed the ability to purchase a specific type of guaranteed issue plan, regardless of her pre-existing condition. There may be limitations on plan options or higher premiums due to her health condition. Question 79. Mr. Rodriguez is a North Dakota resident considering becoming a life insurance agent. North Dakota requires all new agents to pass a pre-licensing exam. Which of the following is not a required step for Mr. Rodriguez to take before taking the North Dakota life insurance pre-licensing exam? A. Complete an approved pre-licensing education course. B. Submit a fingerprint-based background check. C. Pay the required exam fee to the testing organization. D. Apply for a life insurance producer license with the North Dakota Insurance Department. The correct answer is D. Apply for a life insurance producer license with the North Dakota Insurance Department. The pre-licensing exam is typically one of the first steps for aspiring agents. Mr. Rodriguez should complete an approved pre-licensing course, undergo a background check, and pay the exam fee before applying for the life insurance producer license with the North Dakota Insurance Department. Question 80. North Dakota law mandates specific agent disclosure requirements during the life insurance sales process. Which of the following scenarios would not violate North Dakota's agent disclosure requirements? A. An agent fails to disclose the existence of a grace period for premium payments. B. An agent presents life insurance as an investment product without mentioning its death benefit. C. An agent truthfully explains the policy limitations and exclusions but does not elaborate on their potential impact. D. An agent compares features of multiple life insurance policies from different companies. The correct answer is C. An agent truthfully explains the policy limitations and exclusions but does not elaborate on their potential impact. North Dakota requires life insurance agents to make clear and complete disclosures. While elaborating on potential impacts is commendable, failing to disclose policy limitations and exclusions altogether would be a violation. An agent can compare features and truthfully explain the policy while fulfilling disclosure requirements. Question 81. Ms. Lee is a resident of North Dakota and wants to purchase a long-term care insurance policy. According to North Dakota regulations, which of the following statements is most accurate regarding shoppers' rights for long-term care insurance policies? A. Ms. Lee has the right to cancel the policy within 30 days of receiving it, with no questions asked. B. Ms. Lee cannot make any changes to the policy after it is issued. C. Ms. Lee has the right to receive a guaranteed renewal offer each year. D. Ms. Lee is required to take a medical exam before purchasing a long-term care insurance policy. The correct answer is A. Ms. Lee has the right to cancel the policy within 30 days of receiving it, with no questions asked. North Dakota law mandates a free look period for long-term care insurance policies. This allows residents like Ms. Lee to review the policy details and terms within 30 days of receiving it. During this period, she can cancel the policy for any reason and receive a full refund of all premiums paid. This right is established under the North Dakota Century Code, Chapter 26.1-08.103, North Dakota Century Code, Chapter 26.1-08.103, which outlines shopper protections for long-term care insurance products. Question 82. Mr. Rodriguez is a life insurance agent licensed in North Dakota. He is explaining disability income insurance to a potential client. Which of the following statements by Mr. Rodriguez is most likely a violation of North Dakota insurance regulations? A. Mr. Rodriguez explains that disability income insurance can help replace lost income if the client becomes disabled and unable to work. B. Mr. Rodriguez compares disability income insurance plans from different carriers to help the client find the best fit. C. Mr. Rodriguez tells the client that guaranteed issue disability income insurance is available to all North Dakota residents. D. Mr. Rodriguez emphasizes the importance of reviewing the policy exclusions to understand what is not covered by the disability income insurance plan. The correct answer is C. Mr. Rodriguez tells the client that guaranteed issue disability income insurance is available to all North Dakota residents. Guaranteed issue disability income insurance is not mandated in North Dakota. Insurance companies have the right to underwrite applicants and may deny coverage or offer policies with premiums based on individual health factors and risk. Mr. Rodriguez providing inaccurate information about guaranteed availability could be a violation of North Dakota's insurance producer conduct standards outlined in North Dakota Administrative Code Chapter 80-10. Question 83. A North Dakota resident is considering a health insurance plan with a high deductible. They are unsure if a health savings account, HSA, is compatible with this plan. According to North Dakota insurance regulations, which of the following statements is true regarding HSAs and high deductible health plans, HDHPs? A. An HSA can only be used with HDHPs offered by employers. B. There is no minimum deductible amount required for an HDHP to be compatible with an HSA in North Dakota. C. Residents can contribute any amount of money to their HSA each year, regardless of their income. D. Funds remaining in an HSA at the end of the year cannot be carried over to future years. The correct answer is B. There is no minimum deductible amount required for an HDHP to be compatible with an HSA in North Dakota. North Dakota adheres to federal regulations regarding HSAs. To qualify for an HSA, the health insurance plan must meet the IRS definition of an HDHP. This definition outlines minimum annual deductible amounts that vary depending on individual or family coverage. However, there is no set minimum beyond what the IRS establishes. It's important for residents to confirm their specific plan's deductible meets the HDHP qualifications for HSA compatibility. Question 84. A North Dakota resident is applying for a Medicare supplement policy. They are concerned about pre-existing condition exclusions. According to North Dakota regulations, how do Medicare supplement policies handle pre-existing conditions? A. Medicare supplement policies can exclude coverage for any pre-existing conditions. B. Medicare supplement policies cannot deny coverage based on pre-existing conditions, but they can impose waiting periods. C. Residents with pre-existing conditions are ineligible for Medicare supplement policies in North Dakota. D. Pre-existing condition exclusions for Medicare supplement policies depend on how long the resident has resided in North Dakota. The correct answer is B. Medicare supplement policies cannot deny coverage based on pre-existing conditions, but they can impose waiting periods. North Dakota adheres to federal regulations regarding Medicare supplement policies. These policies are standardized and cannot deny coverage or charge higher premiums based on pre-existing conditions. However, there can be a limited waiting period, typically up to 6 months, for coverage of certain pre-existing conditions. Question 85. A life insurance agent in North Dakota is contacted by a client who wants to cancel their life insurance policy. The policy has been in effect for over 5 years. What options, according to North Dakota regulations, should the agent advise the client about? A. The agent should inform the client that cancellation is not possible after a certain period. B. The agent should explain the right to convert the policy to a different type with the same carrier. C. The policy value, if any, will be forfeited upon cancellation. D. All of the above, A, B, and C. The correct answer is D. All of the above, A, B, and C. In North Dakota, life insurance policies typically come with options like conversion and non-forfeiture benefits after a certain period, often 2 to 3 years. This means the policyholder has rights beyond simply canceling. Cancellation. While some policies may allow full cancellation with a refund of premiums paid in the initial years, most will not. Conversion. The policyholder may have the right to convert the existing policy to a different type of life insurance with the same carrier, such as from term life to whole life. Non-forfeiture benefits. After a certain period, the policy may accrue a cash value. Upon cancellation, the policyholder may be eligible for this cash value instead of a full refund of premiums. The specific options and timelines will vary depending on the individual policy details. The agent should refer to the policy documents and explain all available options to the client. Question 86. Ms. Diaz is a North Dakota resident who accidentally received duplicate health insurance policies. According to North Dakota regulations, what should Ms. Diaz do in this situation? A. Ms. Diaz can keep both policies to maximize her coverage. B. Ms. Diaz can choose the policy with the lower premium and discard the other. C. Ms. Diaz should contact her insurance agent or the insurance company that issued the duplicate policy to rectify the situation. D. Ms. Diaz does not need to take any action as long as she only pays premiums for one policy. The correct answer is C. Ms. Diaz should contact her insurance agent or the insurance company that issued the duplicate policy to rectify the situation. Having duplicate health insurance policies can lead to coverage issues and potential fraud implications. North Dakota mandates consumers to maintain accurate insurance information. Ms. Diaz should contact her agent or the insurance company to report the duplicate policy. They will investigate the situation and ensure only one active policy remains on record. This helps avoid coverage gaps and ensures Ms. Diaz is only billed for the chosen plan. Question 87. An agent in North Dakota is explaining individual health insurance plans to a client. The client inquires about replacement of existing health insurance due to job loss. According to North Dakota regulations, which of the following statements is most accurate regarding special enrollment periods for individual health insurance? A. An individual can only qualify for a special enrollment period if they lose their job due to involuntary reasons. B. Losing job-based health insurance due to any reason qualifies for a special enrollment period to obtain an individual health plan. C. There is no special enrollment period for individual health insurance in North Dakota. D. The special enrollment period for individual health insurance in North Dakota lasts for 30 days after job loss. The correct answer is B. Losing job-based health insurance due to any reason qualifies for a special enrollment period to obtain an individual health plan. North Dakota follows federal guidelines for special enrollment periods in individual health insurance. Losing employer-sponsored health coverage qualifies as a qualifying event for a special enrollment period. This allows individuals to obtain individual health plans outside the open enrollment period. Question 88. A North Dakota resident is considering a critical illness insurance policy. They are unsure if the policy benefits would be subject to state income tax. According to North Dakota tax regulations, how are benefits received from critical illness insurance typically treated? A. All critical illness insurance benefits are exempt from North Dakota income tax. B. Benefits used to pay medical expenses are taxable, while benefits used for other purposes are exempt. C. Critical illness insurance benefits are always considered taxable income in North Dakota. D. The tax treatment of critical illness insurance benefits depends on the specific policy details and how they are used. The correct answer is D. The tax treatment of critical illness insurance benefits depends on the specific policy details and how they are used. Taxation of critical illness insurance benefits in North Dakota can vary depending on the circumstances. Generally, benefits used to replace lost income due to illness may be taxable. However, benefits used specifically for medical expenses might be exempt. It's crucial for the resident to consult with a tax advisor to understand the specific tax implications for their situation and chosen critical illness insurance policy. Question 89. A North Dakota agent is working with a client who wants to purchase a long-term care insurance policy. During the application process, the client discloses a pre-existing medical condition. According to North Dakota insurance regulations, how can a pre-existing condition impact the availability and cost of a long-term care insurance policy? A. Pre-existing conditions cannot prevent someone from obtaining long-term care insurance in North Dakota. B. Insurance companies cannot deny coverage based on pre-existing conditions, but they may offer policies with limited benefits. C. Pre-existing conditions will automatically disqualify someone from obtaining long-term care insurance in North Dakota. D. Insurance companies can consider pre-existing conditions when determining eligibility, premium rates, and benefit limitations for long-term care insurance. The correct answer is D. Insurance companies can consider pre-existing conditions when determining eligibility, premium rates, and benefit limitations for long-term care insurance. North Dakota allows insurance companies to underwrite long-term care insurance applications. This means they can consider factors like pre-existing health conditions when deciding on eligibility, premium rates, and potential coverage limitations. Disclosing pre-existing conditions accurately is essential for the client to receive an accurate quote and avoid potential coverage issues later. Question 90. An insurance agent in North Dakota is contacted by a client who wants to file a complaint about their health insurance company. According to North Dakota regulations, which of the following is the most appropriate course of action for the agent to advise? A. The agent should handle the complaint internally and contact the insurance company on the client's behalf. B. The agent should advise the client to directly contact the North Dakota Department of Insurance, NDDOI. C. The agent cannot get involved in disputes between clients and insurance companies. D. The agent should recommend the client file a lawsuit against the insurance company. The correct answer is B. The agent should advise the client to directly contact the North Dakota Department of Insurance, NDDOI. While an agent may try to assist initially, North Dakota law allows consumers to file complaints directly with the NDOI. The NDOI is responsible for investigating insurance-related complaints and ensuring fair treatment for policyholders. Question 91. A resident of North Dakota is considering a Medicare Advantage plan. They are concerned about the network of healthcare providers available under the plan. According to North Dakota regulations, what requirements are there for network adequacy in Medicare Advantage plans? A. Medicare Advantage plans must offer access to all healthcare providers in North Dakota. B. There is no specific requirement for network adequacy in Medicare Advantage plans offered in North Dakota. C. Medicare Advantage plans must offer a network that is sufficient to meet the needs of Medicare beneficiaries in the area. D. The network adequacy standards for Medicare Advantage plans are determined by each individual plan. The correct answer is C. Medicare Advantage plans must offer a network that is sufficient to meet the needs of Medicare beneficiaries in the area. Federal regulations mandate that Medicare Advantage plans offer a network of providers that is adequate to meet the needs of the enrolled population in a service area. This ensures reasonable access to necessary healthcare services. Question 92. An agent in North Dakota is explaining accident insurance benefits to a client. The client asks how long they have to file a claim after an accident. According to North Dakota insurance regulations, there is typically a time limit for filing accident insurance claims. What is the general time frame for filing such claims? A. There is a standard 30-day window to file all accident insurance claims in North Dakota. B. The specific time limit for filing accident insurance claims varies depending on the policy and should be outlined in the policy documents. C. Accident insurance claims cannot be filed after the policy expires in North Dakota. D. As long as the accident occurred while the policy was active, there is no deadline for filing a claim in North Dakota. The correct answer is B. The specific time limit for filing accident insurance claims varies depending on the policy and should be outlined in the policy documents. North Dakota follows a general principle of requiring timely filing of insurance claims. However, the exact time frame for accident insurance claims can vary depending on the specific policy provisions. It's crucial for policyholders to review their policy documents to understand the claim filing deadlines and procedures. Question 93. A North Dakota resident is considering a disability income insurance policy. They are unsure if the benefits received under the policy would be subject to state income tax. According to North Dakota tax regulations, how are benefits typically treated for disability income insurance? A. All disability income insurance benefits are taxable income in North Dakota. B. Benefits are exempt from taxation if the disability is caused by an accident. C. Benefits used to replace lost income due to disability are generally considered taxable income. D. The tax treatment of disability income insurance benefits depends on how the premiums were paid, pre-tax versus after-tax. The correct answer is C. Benefits used to replace lost income due to disability are generally considered taxable income. In North Dakota, disability income benefits that replace lost wages due to a covered disability are typically considered taxable income. This aligns with how earned income is taxed. There might be exceptions for certain benefit types or situations, so consulting a tax advisor for specific guidance is recommended. Question 94. An agent in North Dakota is contacted by a client who wants to add their adult child to their existing health insurance plan. The child is unemployed and does not have their own health insurance. According to North Dakota regulations, can adult children be added to a parent's health insurance plan under certain conditions? A. Adult children can never be added to a parent's health insurance plan in North Dakota. B. There are no restrictions on adding adult children to a parent's health insurance plan in North Dakota. C. Adult children can only be added if they are financially dependent on the parent. D. The ability to add adult children depends on the specific health insurance plan offered by the parent's employer. The correct answer is D. The ability to add adult children depends on the specific health insurance plan offered by the parent's employer. The option to add adult children to a health insurance plan depends on the specific group plan offered by the parent's employer. These plans often have eligibility requirements for dependents, which may include age limitations or student status. The agent should refer to the plan documents or contact the employer's benefits administrator to determine if adding adult children is allowed. Question 95. A North Dakota resident is considering a variable universal life insurance policy. They are concerned about the investment risks involved. According to North Dakota insurance regulations, what is the role of the insurance agent in explaining variable universal life insurance products? A. The agent should downplay the investment risks and focus on the potential benefits. B. The agent has no obligation to explain the risks associated with variable universal life insurance. C. The agent must ensure the client understands the investment risks and suitability of the product for their financial goals. D. The agent should simply provide the policy brochure and let the client decide. The correct answer is C. The agent must ensure the client understands the investment risks and suitability of the product for their financial goals. North Dakota insurance regulations require agents to act in the best interest of their clients. When explaining variable universal life insurance, which has investment components, agents must disclose the associated risks and ensure the client understands the product's suitability for their financial situation and risk tolerance. Question 96. A resident of North Dakota is nearing retirement and is considering an annuity product. They are unsure about the tax implications of different annuity types. According to North Dakota tax regulations, how are withdrawals from traditional IRAs and Roth IRAs typically taxed? A. Withdrawals from both traditional IRAs and Roth IRAs are taxed as ordinary income in North Dakota. B. Withdrawals from traditional IRAs are taxed as ordinary income, while Roth IRA withdrawals are generally tax-free. C. Withdrawals from both traditional IRAs and Roth IRAs are exempt from North Dakota income tax. D. The tax treatment of annuity withdrawals depends on the specific product and how the contributions were made. The correct answer is B. Withdrawals from traditional IRAs are taxed as ordinary income, while Roth IRA withdrawals are generally tax-free. Understanding the tax implications is crucial when choosing an annuity. Traditional IRAs offer tax-deferred growth on contributions, but withdrawals during retirement are taxed as ordinary income. Conversely, Roth IRAs feature after-tax contributions, but qualified withdrawals in retirement are typically tax-free. North Dakota generally follows federal tax guidelines for IRAs and annuities. Question 97. An agent in North Dakota is explaining Medicare supplement policies to a client. The client inquires about renewing their Medicare supplement policy. According to North Dakota regulations, are insurance companies obligated to renew Medicare supplement policies? A. Insurance companies cannot cancel or non-renew Medicare supplement policies without justification. B. Medicare supplement policies can be non-renewed by the insurance company at any time. C. Renewal is guaranteed as long as the client continues to pay premiums. D. The ability to renew depends on the specific Medicare supplement plan chosen by the client. The correct answer is A. Insurance companies cannot cancel or non-renew Medicare supplement policies without justification. North Dakota adheres to federal regulations for Medicare supplement policies. These policies are guaranteed renewable, meaning the insurance company cannot refuse to renew the policy based on the client's health status or age. However, there might be exceptions for non-renewal due to non-payment of premiums, fraud, or plan termination by the insurance company with approval from regulators. Question 98. A North Dakota resident is considering a cancer insurance policy. They are unsure if the policy benefits would be subject to state income tax. According to North Dakota tax regulations, how are benefits received from cancer insurance typically treated? A. All cancer insurance benefits are exempt from North Dakota income tax. B. Benefits used to pay medical expenses are taxable, while other benefits are exempt. C. Cancer insurance benefits are always considered taxable income in North Dakota. D. The tax treatment of cancer insurance benefits depends on how they are used. The correct answer is D. The tax treatment of cancer insurance benefits depends on how they are used. The tax implications of cancer insurance benefits in North Dakota can vary based on their use. Generally, benefits used to replace lost income due to cancer may be taxable. However, benefits used specifically for medical expenses might be exempt. It's recommended for the resident to consult with a tax advisor to understand the specific tax treatment for their situation and chosen cancer insurance policy. Question 99. An agent working in North Dakota receives a complaint from a client about a long-term care insurance claim denial. According to North Dakota regulations, what is the agent's responsibility regarding such complaints? A. The agent can represent the client and fight the claim denial with the insurance company. B. The agent should advise the client to file an appeal directly with the insurance company. C. The agent cannot get involved in disputes between clients and insurance companies. D. The agent should report the complaint to the North Dakota Department of Insurance, NDDOI. The correct answer is B. The agent should advise the client to file an appeal directly with the insurance company. While an agent may try to explain the denial or mediate communication, they typically cannot directly intervene in claim disputes. North Dakota regulations generally require policyholders to follow the appeal process outlined by their insurance company for claim denials. The agent should advise the client on the appeals process and provide any necessary information or forms. Question 100. A resident of North Dakota is considering a health insurance plan with a health savings account, HSA. They are unsure about eligibility requirements for HSAs. According to North Dakota regulations, which of the following is not a requirement for contributing to an HSA? A. The resident must be enrolled in a high-deductible health plan, HDHP, as defined by the IRS. B. The resident cannot be covered by any other health insurance plan besides the HDHP. C. The resident must not be enrolled in Medicare. D. There is no age limit for contributing to an HSA in North Dakota. The correct answer is B. The resident cannot be covered by any other health insurance plan besides the HDHP. North Dakota follows federal guidelines for HSAs. To contribute to an HSA, the resident must be enrolled in a qualified high-deductible health plan, HDHP. However, they can have other limited coverage, such as dental or vision insurance, without disqualifying themselves from HSA contributions. Question 101. An agent in North Dakota is contacted by a potential client who wants to purchase life insurance. The client inquires about the contestability period in a life insurance policy. According to North Dakota insurance regulations, what is the purpose of a contestability period in a life insurance policy? A. The contestability period allows the beneficiary to contest the payout of the death benefit. B. The contestability period is a time frame during which the insurance company can investigate the validity of the policy. C. The contestability period determines how long the policyholder must pay premiums before the full death benefit is paid. D. The contestability period allows the policyholder to make changes to the policy without penalty. The correct answer is B. The contestability period is a time frame during which the insurance company can investigate the validity of the policy. The contestability period is a clause in most life insurance policies that allows the insurance company to challenge the validity of the policy within a specific time frame, typically 2 years, after the policy's issuance. This allows them to investigate potential misrepresentations on the application that could affect the risk assessment. Question 102. Ms. Lee is a resident of North Dakota and is considering purchasing a long-term care insurance policy. According to North Dakota regulations, which of the following statements is most accurate regarding mandated benefits in long-term care insurance policies? A. Carriers must offer policies that include benefits for home health care only. B. Carriers must offer policies that include benefits for both nursing facility care and home health care. C. Carriers have the option to offer policies that exclusively cover nursing facility care. D. Carriers are prohibited from offering long-term care insurance policies in North Dakota. The correct answer is B. Carriers must offer policies that include benefits for both nursing facility care and home health care. North Dakota mandates that long-term care insurance policies offered in the state must include benefits for both nursing facility care and home health care. This ensures a more comprehensive coverage for policyholders who may require care in different settings. Question 103. Mr. Rodriguez is a life insurance agent licensed in North Dakota. He is contacted by a potential client who resides in South Dakota. Can Mr. Rodriguez sell life insurance to this client? A. Yes. Mr. Rodriguez can sell life insurance to the client as long as he discloses his North Dakota licensure. B. No. Mr. Rodriguez cannot sell life insurance to the client without obtaining a life insurance license in South Dakota. C. Mr. Rodriguez can sell the policy if it covers residents of both North Dakota and South Dakota. D. Mr. Rodriguez can only sell the policy if the client is originally from North Dakota. The correct answer is B. No. Mr. Rodriguez cannot sell life insurance to the client without obtaining a life insurance license in South Dakota. Life insurance agents are required to hold a license in the state where the resident they are selling to lives. In this scenario, Mr. Rodriguez's North Dakota license does not authorize him to sell life insurance to someone residing in South Dakota. He would need to obtain a proper license in South Dakota to conduct business there. Question 104. A North Dakota health insurance policyholder files a complaint against their insurance company regarding a claim denial. The policyholder disagrees with the company's explanation for the denial. What is the most appropriate course of action for the policyholder in this situation? A. Contact their life insurance agent directly to discuss the claim denial. B. File an appeal with the North Dakota Department of Insurance. C. Ignore the denial and resubmit the claim with additional documentation. D. Take legal action against the insurance company. The correct answer is B. File an appeal with the North Dakota Department of Insurance. North Dakota Department of Insurance, NDDOI, offers an external review process for policyholders who have disagreements with their insurance company's claim decisions. Filing an appeal with the NDOI allows for an impartial review of the situation. Question 105. Mrs. Garcia is a North Dakota resident approaching Medicare eligibility. She is confused about the difference between a Medicare supplement policy, Medigap, and a Medicare Advantage plan, Part C. How would you best explain the key distinction between these two options? A. Medigap plans are offered by the federal government, while Medicare Advantage plans are private insurance options. B. Medigap plans cover what original Medicare, Parts A and B, doesn't, while Medicare Advantage plans replace original Medicare entirely. C. Both Medigap and Medicare Advantage plans require separate enrollment from original Medicare. D. Medigap plans have standardized benefits across different companies, while Medicare Advantage plans offer various benefit options. The correct answer is B. Medigap plans cover what original Medicare, Parts A and B, doesn't, while Medicare Advantage plans replace original Medicare entirely. Original Medicare, Parts A and B. This is the federal health insurance program for people 65 and older or those with certain disabilities. Part A covers hospital care, while Part B covers doctor visits, outpatient care, and some preventive services. Medigap plans, Medicare Supplement. These are private insurance plans that supplement original Medicare by helping to cover out-of-pocket costs such as deductibles, coinsurance, and copays. Medigap plans are standardized across different insurance companies within a specific plan type, e.g., Plan A, Plan G. Medicare Advantage plans, Part C. These are private insurance plans that act as an alternative to original Medicare. They provide all the benefits covered by Parts A and B, often including additional benefits like vision or dental coverage. Medicare Advantage plans offer various benefit options and networks, so it's important to compare plans carefully. Question 106. North Dakota law mandates continuing education requirements for life and health insurance agents. What is the primary purpose of these continuing education, CE, requirements? A. To update agents on changes in tax regulations for insurance products. B. To ensure agents stay current with industry trends and best practices. C. To collect additional fees from agents to support the North Dakota Department of Insurance. D. To promote specific insurance products offered by certain companies. The correct answer is B. To ensure agents stay current with industry trends and best practices. Continuing education, CE, requirements for insurance agents serve to ensure they maintain their knowledge and expertise in the ever-evolving insurance industry. By staying current with regulatory updates, product changes, and best practices, agents can provide better service to their clients and uphold ethical standards in the profession. Question 107. Mr. Khan is a North Dakota resident who recently purchased a disability income insurance policy. The policy includes an elimination period before benefits begin to pay out. What does the elimination period represent in a disability income insurance policy? A. The period during which Mr. Khan is expected to fully recover from his disability. B. The waiting period before Mr. Khan can file a claim for benefits under the policy. C. The timeframe within which Mr. Khan must pay his initial premium for the policy. D. The maximum duration for which Mr. Khan can receive benefits under the policy. The correct answer is B. The waiting period before Mr. Khan can file a claim for benefits under the policy. The elimination period in a disability income insurance policy refers to the waiting period between the onset of a disability and the date benefits begin to pay out. This period is typically defined in the policy documents, e.g., 30 days, 90 days, etc. The policyholder is responsible for their own expenses during the elimination period. Question 108. North Dakota law requires health insurance companies to offer guaranteed issue for certain health insurance policies. What does guaranteed issue mean in this context? A. The insurance company can set any premium rate they desire for the guaranteed issue policy. B. The policy covers all pre-existing medical conditions without exclusions. C. The guaranteed issue policy offers the most comprehensive benefits available in the market. D. The policy is guaranteed to renew every year, regardless of the policyholder's health status. The correct answer is A. The insurance company can set any premium rate they desire for the guaranteed issue policy. Guaranteed issue, in the context of health insurance, refers to a situation where an insurance company is mandated by law to offer a specific policy to any applicant who meets eligibility requirements, regardless of their health status. However, it's important to note that guaranteed issue policies typically come with limitations, such as higher premiums or exclusions for certain pre-existing conditions. Question 109. A North Dakota resident is considering purchasing a critical illness insurance policy. What is the primary purpose of a critical illness insurance policy? A. To cover the cost of routine doctor visits and preventive care. B. To provide a lump sum payment upon diagnosis of a covered critical illness. C. To act as a replacement for health insurance in case of job loss. D. To supplement Medicare benefits for seniors with additional coverage. The correct answer is B. To provide a lump sum payment upon diagnosis of a covered critical illness. Critical illness insurance is a type of supplemental insurance that provides a lump sum cash benefit upon diagnosis of a critical illness covered by the policy. This benefit can be used to help with various expenses associated with the illness, such as lost wages, treatment costs not covered by primary health insurance, or out-of-pocket medical costs. Question 110. Ms. Davis is a North Dakota resident who receives health insurance coverage through her employer's group health plan. She is planning to get married. Under the North Dakota continuation of coverage law, what are Ms. Davis's options if her spouse's employer-sponsored health plan has different benefits or higher costs? A. Ms. Davis cannot switch to her spouse's plan and must remain on her employer's plan. B. Ms. Davis has the right to continue coverage under her employer's plan by paying the applicable premium. COBRA option. C. Ms. Davis can automatically enroll in her spouse's plan without any additional steps. D. Ms. Davis loses her employer-sponsored health coverage upon marriage. The correct answer is B. Ms. Davis has the right to continue coverage under her employer's plan by paying the applicable premium. COBRA option. North Dakota law, like many other states, adheres to COBRA, Consolidated Omnibus Budget Reconciliation Act, continuation of coverage provisions. This allows Ms. Davis, under certain qualifying events like marriage, to elect to continue coverage under her employer's group health plan by paying the full premium cost, plus a possible administrative fee. This can be a valuable option if her spouse's plan has less favorable coverage or higher costs. It's important to note that COBRA continuation has time limitations, so Ms. Davis would need to act within the designated enrollment period. Question 111. An insurance agent in North Dakota is explaining replacement of life insurance policies to a client. What is one of the key factors a policyholder should consider when evaluating a potential replacement policy? A. The replacement policy must offer a lower monthly premium than the existing policy. B. The death benefit of the new policy should be identical to the existing policy. C. The guaranteed insurability provisions of both the existing and replacement policies. D. The agent's commission rate for selling the new life insurance policy. The correct answer is C. The guaranteed insurability provisions of both the existing and replacement policies. Replacing an existing life insurance policy is a significant decision. One crucial factor to consider is the guaranteed insurability provisions. These provisions may allow the policyholder to purchase additional coverage in the future without additional medical underwriting, regardless of changes in their health status. Losing this feature by replacing the policy could be detrimental, especially if the policyholder's health deteriorates in the future. Question 112. North Dakota law outlines specific requirements for replacement of health insurance policies. What is one of the major advantages for a policyholder following these replacement disclosure requirements? A. The insurance company is obligated to offer a discounted rate on the new policy. B. The policyholder can avoid paying any cancellation fees for the existing policy. C. The replacement process is expedited, and the new policy becomes active immediately. D. The policyholder has a documented record of receiving important information about the replacement, minimizing potential disputes later. The correct answer is D. The policyholder has a documented record of receiving important information about the replacement, minimizing potential disputes later. North Dakota replacement disclosure laws mandate that agents provide detailed information to policyholders considering replacing a health insurance policy. This information includes outlining potential disadvantages of the replacement, like loss of coverage or higher premiums. By following these requirements, a documented record is created, protecting the policyholder in case of any issues arising after the replacement. Question 113. A North Dakota resident is considering purchasing a long-term care insurance policy. Which of the following statements is most accurate regarding benefits typically included in long-term care insurance policies? A. Long-term care insurance policies only cover nursing home stays and do not provide benefits for home health care. B. Benefits are paid out as a lump sum amount upon diagnosis of a qualifying condition. C. Benefits are typically calculated as a daily or monthly reimbursement for covered services. D. Long-term care insurance policies provide comprehensive medical coverage similar to traditional health insurance. The correct answer is C. Benefits are typically calculated as a daily or monthly reimbursement for covered services. Long-term care insurance policies are designed to help cover the costs associated with long-term care needs, such as assistance with daily living activities, bathing, dressing, eating, due to illness, injury, or cognitive impairment. Benefits are typically paid out as a daily or monthly reimbursement for qualified services received in various settings, including nursing homes, assisted living facilities, or even for in-home care. Question 114. An insurance agent in North Dakota is explaining Medicare Part D, prescription drug coverage, to a client. What is an important concept for the client to understand regarding Medicare Part D coverage? A. Part D prescription drug plans are free for all Medicare beneficiaries. B. Coverage and costs, premiums, deductibles, copays, can vary depending on the chosen Part D plan. C. There are no limitations on the types of prescription drugs covered by Part D plans. D. Clients are automatically enrolled in a Part D plan upon reaching Medicare eligibility. The correct answer is B. Coverage and costs, premiums, deductibles, copays, can vary depending on the chosen Part D plan. Medicare Part D is optional prescription drug coverage available to Medicare beneficiaries for an additional cost. It's crucial for clients to understand that there are various Part D plans offered by private insurance companies. These plans have different formularies, lists of covered medications, coverage tiers, and associated costs, premiums, deductibles, copays. Clients should carefully compare plans to find one that best suits their specific needs and medications. Question 115. North Dakota law mandates agent licensing for individuals who sell life insurance and health insurance products. What is the primary purpose of agent licensing? A. To generate revenue for the North Dakota Department of Insurance through licensing fees. B. To ensure agents possess the necessary knowledge and qualifications to sell insurance products. C. To restrict competition within the insurance industry by limiting the number of licensed agents. D. To promote specific insurance companies and their products to North Dakota residents. The correct answer is B. To ensure agents possess the necessary knowledge and qualifications to sell insurance products. Agent licensing serves the critical purpose of consumer protection. By requiring agents to pass a qualifying exam and obtain a license, the state ensures they have the necessary knowledge and understanding of insurance products, regulations, and ethical conduct. This protects consumers from misrepresentation or unsuitable insurance recommendations. Question 116. A North Dakota resident is considering purchasing a cancer insurance policy. What is a potential disadvantage of a cancer insurance policy compared to a comprehensive health insurance plan? A. Cancer insurance policies typically offer lower monthly premiums than health insurance plans. B. Cancer insurance policies provide a lump sum benefit upon diagnosis of cancer, which can be used for various expenses. C. Cancer insurance covers a wider range of medical conditions than most health insurance plans. D. Cancer insurance policies may have limitations on benefits or exclusions for certain types of cancer. The correct answer is D. Cancer insurance policies may have limitations on benefits or exclusions for certain types of cancer. While cancer insurance offers a specific benefit upon cancer diagnosis, it's important to understand potential limitations. These limitations might include coverage exclusions for specific types of cancer or pre-existing conditions, benefit caps on the total payout amount received, specific requirements for the type or stage of cancer for coverage to apply. A comprehensive health insurance plan, while typically having a higher premium, would likely cover the costs associated with cancer treatment, including doctor visits, surgery, hospitalization, and medications. Question 117. An insurance agent in North Dakota is explaining disability income insurance to a client. What is one of the key factors a client should consider when choosing a disability income insurance policy? A. The policy should offer the highest possible monthly benefit amount. B. The elimination period should be as short as possible to minimize waiting time for benefits. C. The agent's commission rate for selling the disability income insurance policy. D. Whether the policy definition of disability aligns with the client's occupation and potential limitations. The correct answer is D. Whether the policy definition of disability aligns with the client's occupation and potential limitations. Disability income insurance replaces a portion of lost income if the policyholder becomes disabled and unable to work. A crucial factor for clients is the policy definition of disability. This definition outlines the criteria that must be met for benefits to be triggered. It's important to ensure the definition aligns with the client's specific occupation and potential disabling conditions. For instance, an office worker might prioritize a definition that considers inability to perform their regular job duties, while a construction worker might be more concerned with coverage for specific physical limitations that could prevent them from working in their field. Question 118. North Dakota law mandates specific requirements for readability in policy documents issued by insurance companies. What is the primary purpose of these readability requirements? A. To ensure policy documents are visually appealing and easy to understand. B. To hold insurance companies accountable for using clear and concise language in their policies. C. To require all policy documents to be translated into multiple languages. D. To limit the length of policy documents to a specific page count. The correct answer is B. To hold insurance companies accountable for using clear and concise language in their policies. Readability requirements in insurance policies aim to promote consumer protection. By mandating clear and concise language, the state ensures policyholders can understand the terms, conditions, exclusions, and benefits outlined in their insurance contracts. This empowers them to make informed decisions and avoid potential coverage disputes. Question 119. A North Dakota resident is considering applying for Medicaid, a government program that provides health coverage for low-income individuals and families. What is an essential factor to consider when determining Medicaid eligibility? A. The applicant's age and employment status are the only determining factors for Medicaid eligibility. B. Medicaid eligibility is solely based on the applicant's medical needs and diagnoses. C. Medicaid eligibility is determined based on a combination of income, assets, and household composition. D. Medicaid is only available to North Dakota residents with dependent children. The correct answer is C. Medicaid eligibility is determined based on a combination of income, assets, and household composition. Medicaid eligibility is determined based on a combination of factors, including income. Applicants must meet income thresholds set by the state and federal government. Assets. The value of assets owned by the applicant, and sometimes their spouse, can also impact eligibility. Household composition. Family size and dependency status can be factors in some cases. North Dakota Department of Human Services administers the Medicaid program in the state. They can provide more specific information regarding eligibility criteria and the application process. Question 120. An insurance agent in North Dakota is explaining annuities to a client. What is a key difference between a fixed annuity and a variable annuity? A. Fixed annuities offer a guaranteed growth rate, while variable annuities have a variable growth rate tied to market performance. B. Fixed annuities provide income for a set period, while variable annuities offer lifetime income benefits. C. Fixed annuities are only available for retirement savings, while variable annuities can be used for any financial goal. D. Fixed annuities involve higher fees compared to variable annuities. The correct answer is A. Fixed annuities offer a guaranteed growth rate, while variable annuities have a variable growth rate tied to market performance. Fixed annuities. These offer a guaranteed interest rate on the invested principal amount. The growth is typically predictable, and the policyholder receives the promised returns plus the principal amount at the end of the term. Variable annuities. These invest the principal amount in subaccounts tied to the stock market or other investment vehicles. The growth rate is variable and depends on the performance of the chosen subaccounts. There's potential for higher returns compared to fixed annuities, but also the risk of losing money due to market fluctuations.